now relatively we are at par with them.
Okay, and I think with textiles there is some bit of positive momentum that has continued. What I'm seeing in auto ancillaries as well. I think any quick view, Parag Bhai, on that?
So that we need to check on that section 232 what is going to happen, and that we need to again have a check. Some of the products which are taxed, let's say 25%, now they will come to 15%, and so that can be a benefit in that particular segment also.
Okay, so some buying interest coming in slightly in terms of auto-ang. Kush, any initial opening stocks that you're getting?
Yes, just a quick word on the index. I think this is a good, this is a good move. Rather than opening gap up 200 points higher and then, sliding, opening about 80 points, 100 points, up, and then gaining from there, this is sign of strength. So I think, my wish of buy on dips may or may not be granted. That doesn't seem like it'll be granted today at least. But yeah, if you have any positions, continue to hold them with trailing stop losses. As far as stocks go, Max Financial and Union Bank, the two stocks that we discussed, are doing well at the high point of the day. I know it's been just 9-10 minutes since market open, but the fact that, they open positive and still gaining strength, I think we should stick with, stocks which have strength. So Max Financial and Union Bank continue as buy calls.
Okay, thank you so much, Kush, Parag and Amar for speaking with us today. We're continuing the big conversations this morning on India Market Open. Nitin Bhasin, Head of Institutional Equities at Ambit, joining us this morning. Nitin, a very good morning to you. What do you think are the sort of trepidation or the concerns as far as tariffs go? All things considered, this is good news for any nation that is facing tariffs, including India.
Yeah, so I've maintained for the last 1 year or so that the tariff imposition by the US government or Mr. Trump, is one of the most confusing moves. We'll keep on seeing new things every now and then. I think the trepidations are, now next what? So I personally think that this is going to remain for a while. This is a tussle, and nobody can say that we are covered for a while. So we are as a house, we are not saying that this is the end of it. This will keep on increasing. I think this actually raises the concerns for Indian companies that they should actually go back and do inward looking on it. That this gives an opportunity for them to say, okay, let's look at better products. Let's look at better alliances. Go and form more global alliances with other countries or other partners. So it's a wake-up call for all of us in India that, we can't just depend upon one country where it appears that, and that country is hell-bent on actually changing all commercial relationships with all countries in the world. So hence, I would say that the real trepidation should be, we can't just look US. We'll have to build business models, alliances, and cost capabilities and product capabilities for different markets in the world and put our eggs in multiple baskets.
Nitin, one would say that's exactly the effort, right? With all the free trade agreements that India has gone ahead and signed. But this will take time to transition. The size of the US market makes it one that we cannot ignore or get away with or get away from, at least in the short term. For now, in terms of how equities are responding, is it the sense that the worst is over in terms of tariffs, or are we looking at a new leg of uncertainty?
I would belong in the latter camp, that there will be more uncertainty, as if not. Then we got our US deal also signed. I was not very particularly impressed by despite what deal we got versus the deal what the Americans got over here. Perhaps we investing $500 billion or buying goods worth $500 billion from the US, and no major relief on the relative duty rates to the ASEAN countries. So I wouldn't say that it was a good sentimental thing, but I don't think so it was impacting our Indian economy that materially. I think what we need to think about is, can we actually build businesses where FDI comes in from all over the world, and perhaps we can offer people much faster clearances in putting up projects in India. I think beyond the FTA, there's much more that the government can do in terms of increasing the confidence of the global capital allocators, because global equity markets are going to go through a lot more change as bigger listings of AI companies happen, bigger defense companies in Europe and other parts of the world happen. I don't think so that the FPI will be short of opportunities to participate in other markets either because of AI listings, defense listings, or manufacturing listings of large sizes in many other parts of the developed and near developed world.
Okay, Nitin, good morning. Hiral on this side. You're talking about the kind of impact we'll see overall. There is some bit of cautiousness, but from a strategy perspective, what are you asking investors to do? Because your outlook in terms of India was slightly negative when it comes to the corporate earnings growth. You found expensive valuations as well as an additional pressure. Where do you stand now? Because Q3 earnings somewhere have been better than what the street was estimating, specifically for broader markets as compared to large caps. Any interest that you see coming back, taking the way valuations have come off slightly? Yes, they're not, I wouldn't say they're cheap, but have come off slightly.
I think one of the things that in my last 1 week of trip in Europe, meeting global investors, it clearly is that people are still very cautious when it comes to India because the trends are not very certain. And just giving you an example of where the consumption trends came out from the recent earnings quarters also. Consumer durables, pretty much not holding up at all, whereas consumer discretionary doing very well when it comes to, let's say, luxury versus value doing much better. Going to hospitality or retail in the real estate, luxury doing slightly much better than the value. So I think in trends in India, I don't think that we have one common trend in consumption right now. There were pockets of some surprises of earnings. I think BFSI, especially in the small cap, held up really well. I think consumer discretionary held up really well. But our backward-looking numbers don't see that the earnings trajectory of this year's earnings has changed. We were at about 6-7% Nifty 50 growth. And I think today also we are at 6-7% Nifty 50 growth. In FY27, yes, the whole consensus expects it to grow at about 15%. But most of it, 50% of the incremental growth is supposed to come from banks. Even the consensus earnings suggest that it is banks what everybody is banking upon, or perhaps another 15% of the incremental growth coming from metals industry. So I'm yet not seeing very certain signs in the earnings estimates of the market participants or the recent earnings gone by for changing the trajectory of the earnings. So that's one. Number two, yes, we were cautious on the market last year. And we still remain that it's a very sideways market. It's a stock pickers market. Top 10 stocks will relatively do or lose less or do much better. All the companies more than about 3-4% of weight. We know that the IT stocks have taken a beating, and mid cap and small cap, perhaps we are still about 6 to 9 months away. Some of my colleagues will say even more, but I would say we're at least about 6 to 9 months away. In the broader small cap valuations, perhaps we need more correction before we become very constructive over there. Without saying that, also saying that the small cap BFSI, whether it is MFIs, whether it is regional banks, they look to be a good space because the credit growth, their loan deposit ratios and the credit cost cycle appear favorable for them.
Okay, so 6 to 9 months away for that cycle to turn valuations to become reasonable when it comes to broader markets. Thank you, Nitin, so much for joining in. Always a pleasure to speak to you as well. But moving on, BEML, that's another stock to focus on. They've reported a revenue-led quarter. Profitability has been impacted by that one-off metro provision, which weighed on the margins as well. Before we get in the management, Shantanu Roy, Chairman and Managing Director of BEML, Puneet joins us to tell us more in terms of what has worked and what is that overall picture looking like. Puneet, over to you.
Well, thank you for that. Multiple key updates coming in for BEML this quarter. As you rightly mentioned, revenue grew 23%, but EBITDA plunged by 94% on a YOY basis, led by the one-time provision of 80 to 85 crores. Specifically, they mentioned it for Metro, which is under construction. The other expenses also is up 78% in this particular quarter at 255 crores. Although the order book has been maintained at almost 3.9 times its revenue at over 16,000 crores, there has been, Q3 order inflows of almost 1,000 crores. Now, the company has mentioned that they're expected to reach 20,000 crores by the end of this year itself. So, one question will be of where the incremental order flows will come from. given that Q4 is generally a strong one in terms of order inflow. The other aspect will be of a new capex that the company has incurred of almost 1,500 crores approved on 7th Feb. Now they specifically said this will be a greenfield rail manufacturing facility coming in Madhya Pradesh. So the timelines of that and the phases where the investment will come. And finally, in terms of outlook, what the company sees in terms of revenue growth for FY27 will be the some key aspects to watch out for.
Okay. So thank you for that setup, Puneet, because lots that has happened there as well, and it'll be interesting to have that conversation with Shantanu Roy, Chairman and Managing Director at BEML, who joins in. Shantanu, good morning and welcome to the show. Always a pleasure to speak to you on NDTV Profit. My first question coming to you is, strong revenue growth, 23-24% is what you're looking at, but a loss that has come in this time around, and this is on the back of cost pressures as well as project-specific provisions that you have made as well. If you could help us understand, is this going to be a one-off, and are the coming quarters absolutely intact where the bounce back will come in, or are you expecting some bit of continuity from here on?
Hi, good morning, and thanks for having me with you. As I had mentioned earlier also, this is a one-off event, and we had to make provision for a long pending challenge that we had regarding one metro project, which is around 80-85 crores, and it's a one-off thing. If we, remove this particular line item, then we have done much better. We have done pretty well in terms of the EBITDA also, as compared to the same quarter in the last financial year. And, there has been a jump in the year-on-year revenue by almost 24%. If you look at the consolidated sales turnover, that is a top line, there is a growth of, there is an increase of around 8 to 9% as compared to last year's number during this time, that is after the third quarter.
Okay, so Shantanu, with this specific project that you're talking about as well, where your provision has been made, what is the status when it comes to resolving this underlying issue to actually prevent any further provisioning that could be on the cards?
In this, there will not be any further provisioning, because whatever we had to do, we have done in this particular quarter itself, and we have brought forward very specifically in this quarter itself. So it will not, it stops here. So there will not be any further provisioning for this particular project. That is, I'm quite sure about it. As far as, this particular project is concerned, another good thing is that with this, we will be able to move forward and complete the project. The execution starts sometime 12 months from now. And we intend to complete this within a period of 12 months from the time we start executing. That is approximately 24 months from today.
Got that. Now, my other question coming to you is in terms of the margin drop, Shantanu. It's a major downtick that has come in on a year-on-year basis. I know raw material costs are rising, so that is one of the major concerns which is not in anyone's hand. But what is the plan to restore margins back to that 13 to 14% kind of a range, which was your previous guidance as well?
As I said, the margin drop is only because of this one-time provisioning. And this will be able to, wipe out by our top-line numbers in the fourth quarter. And with the projects that we currently have in hand, the kind of product mix that we have in hand, definitely the margins will be restored to at least what was there in the last financial year. As far as the raw material is concerned, you see raw material cost is rising, that there is no doubt about it. But what we have done is we have rationalized our design and trying to optimize the design so that, even a 1% drop in the material cost has a huge positive impact on the EBITDA, on the margins.
Okay.
And number two, exports. So we expect some revenue from the exports in the last quarter, and that will add to the margin.
Okay. And what about your order book and execution? What's the visibility that you have? Because 20 to 22,000 odd crores is what you're looking at in terms of what you would be approaching. And secondly, Vande Bharat and metro delays that are happening as well. If you have to add all of this to the defense sector growth and your export revenue target that you're talking about right now, a culmination of all of this, what will it mean for your fourth quarter of FY26 and getting into FY27?
No, you want, your question is specifically on the top line or on the order book?
Mainly on the order book, because in terms of the order book, we're looking at a 22,000 crore number, right? Plus, to add to that, there are some delays happening on Vande Bharat, metro delays. So, a culmination of all of that, what does that look like?
So let us look at the order book. The order book of roughly 16,200, 16,300 crore that we currently have. It is made up of 68% from the rail and metro, 25% from defense, and around 7% from mining. Now, if you look at the order inflow this year, 50% has come from rail and metro, and roughly 25% each from defense and from mining, the mining vertical. In the coming 1 month or so, we are further looking at the orders mainly coming from the rail and metro, almost 80%, and the balance will come from defense and from mining construction. Now, we have emerged, L1 in one of the international tenders. It's a sizable order for mining. We are just waiting for the details, and we expect that once the contract, we expect to sign the contract also as and when it happens. Number two, we are trying for an order for the metro rolling stock from Africa. And it depends on the financial closure. As soon as the financial closure happens, we'll be having that order. So in defense, we expect some 1 or 2 good orders to come to be finalized in the last month of the financial year. So with this, I'm pretty confident that the order book will be robust. As far as the execution delays are concerned, these execution delays are not delays per se. If you look at the metro execution, Bangalore Metro, every metro project is like a new project, and we have to deliver the first proto and then we get the bulk clearance. So the Bangalore Metro first proto has been supplied. It has undergone all the tests. Now it is undergoing oscillation trials as I talk to you. But in the meantime, we have already supplied 2 more train sets. Another 5 to 6 more train sets we are trying to complete by March. We are trying to complete the last train set for Mumbai Metro. That is a 63rd train set of the existing order by March. Vande Bharat Sleeper, 2 trains have already been put into commercial operation. We are left with another order for another 8 train sets, which we intend to complete by the first quarter of the next financial year. So execution is well on track. It is picking up. And whatever were the supply chain challenges, we are resolving it step by step. In defense, I would say the supply chain challenges have been taken care, have been mitigated to the extent of around 80%. So banking on these, riding on these improvements in the supply chain, in the industry partner onboarding that we have done, our execution, our top line is also picking up.
Okay, so in line with the order book, the execution is going to pick up from here on. That's the word coming in. Thank you, Shantanu, so much for joining in. Always a pleasure. Margins will be back on track in that 6-7% kind of range is what the management has indicated. But moving on, this is an interesting time where your, sales, your Chaitri Navratri comes in the month of March. Now, because of this, there's a potential probability of a tractor sales jump that could be happening as well. And this could be meaningful in the March quarter itself. What would this actually mean? My colleague Puneet first joins us to set this up for us as to what is in store when it comes to tractor sales with Chaitri Navratri falling in the month of March. Puneet, over to you.
Well, thank you for that. It's definitely a big fillip on an already very strong year for tractors in FY26. Now, the key aspect that, CRISIL has estimated a 22 to 24% growth for tractors in this year, and it will get it to a highest number of almost 1.17 million units sold in a financial year, and it will be the highest and all set to be that now. Now, apart from the growth momentum that has happened for tractors post the GST rate cuts, as you rightly mentioned, the Chaitri Navratri coming in the month of March this time, compared to being split last year is one of the biggest aspects. Now, last year it was between 30th March 2025 going into till April 7th, and hence a lot of that positive impact came into quarter 1 of FY26. This time around though, this also, of course, a lot of sales were split between those 2 quarters, but this time around the Chaitanya Navratri dates have come in between 19th March to 27th March, which is a very auspicious period to purchase vehicles, and especially tractors in the rural area. So hence you could see another additional fillip to already which we've seen with the GST rate cuts in this particular quarter. The other aspect of the sales growth as well, almost 21% growth for FY26 in the first 10 months is the additional kicker as well, what has already happened with the GST rate cuts. But there are just these 2 challenges before I toss it back to you. One, of course, that the H2 of FY26 will be a very strong base. So a lot of analysts estimating that there could be cuts in H2 of FY27 or a very flat year essentially. And the second challenge being TREM 5 emission norms which are coming in as well. That could be an impact potentially if it does happen in FY27. So while the picture is very rosy and expected to be in FY26, watch out for these 2 factors in FY27 as well.
Okay, Hemal Thakkar, thank you for that, Puneet. Hemal Thakkar, Director, CRISIL Intelligence with us this morning. Ashwin Patil, Head of Fundamental Research, LKP Securities, also joining in, and he tracks the sector. Hemal, let me start with what is CRISIL's take? Why are you projecting an increased tractor purchase in Q4, and have we seen previous data pair out this trend?
Okay. So, hi, thank you for having me. If you actually see, the year has been very, very good. After 2019, we have seen consecutive good monsoons, from an overall rainfall perspective, which augurs very well for tractors. 2019 was the only year where we have seen almost a 16% deviation from long period average. Otherwise, the rainfall has been very, very good or close to normal. So the water table levels are good, reservoir levels are at about 65% even after, the Rabi season almost through. So it puts us in a very good position from a futuristic perspective. And as mentioned by you earlier, this year Chaitra Navratri is also going to be completely in quarter 4, that is in the month of March from 19 to 27, in comparison to it being split into 2 parts in March and April. So the lower base of last year will also help us grow significantly in the quarter 4. And hence we are expecting this year quarter 4 to grow by about 34 to 35% as compared to last year, which will put us on a very, very strong wicket.
Okay, I want to actually take that theory to Ashwin Patil. How do you look at tractor sales in quarter 4, Ashwin, and what do you think are the companies that will benefit the most?
See, if you have heard the con call of Mahindra and Mahindra after the Q3 results, they had given they have said that the industry will grow somewhere near 24%. So 24%, and if this Chaitra Navratri is falling in the month of March, that is Q4 itself, it will be a further bump up for the tractor sales, I guess, for the full year. So maybe like 26-27% kind of growth can be expected for full year FY26. So, we have seen a very good monsoon this year with the Rabi sowing very strong and Kharif output going good. So I think the rural sales should see a lot of celebration in this Q4. But going forward in the year of FY27, I would say that the higher base of the second half primarily of FY26 may see some sort of sluggishness in the sales growth in second half. Also, we can say that the Met department is somewhat skeptical about upcoming El Nino impact in the second half of monsoon. So that may have some sort of negative impact, and also the TREM regulations, which you pointed out earlier. I think all these will be culminating into a slightly flattish to a lower single-digit kind of growth on a positive note, I would say, in FY27. But FY26, that is going to be the Q4 especially is going to be even much better than the previous 3 quarters, I would say.
Okay, Hemal, considering that tractor sales have already been quite strong, do you think that much latent demand exists in Q4? And I know that's an auspicious period, but like I asked you, historically, what is the proportion of sales that take place in this auspicious period?
So generally, our sense is about 25,000 units get sold, during the Chaitra Navaratri period as of last year, as per estimates. This year, we are expecting this to be about 40,000. So from that perspective, if you see, there is going to be a huge jump as compared to last year. And as you rightly said, what is also very important is if you look at the tractor sales from 2017 to 2019, they were on a record high at that point of time. So the replacement demand is also very, very strong. But because of increase in prices that we've seen in the last couple of years, we've seen that a lot of people have been postponing this replacement, which are now culminating after GST cut has happened. So that is also something which is fueling demand. So Chaitra Navratri, we are expecting sales of closer to 40,000 for this fiscal as compared to about 25,000 last year, which will fuel demand in Q4.
Okay, so what would be Ashwin, stock specific? You talked about M&M, you talked about escorts. What would be the top gainer from a possible Q4 flush?
Definitely, so the market leader, which is M&M, would be the biggest beneficiary of this. Secondly, followed by Escorts Kubota, and third is VST Tillers, which is a small company manufacturing smaller tractors and tillers. In the specifically, it's a regional player. So I would say that all these players will be getting a strong benefit out of this Q4 extravaganza, I would say.
Okay, thank you so much, Hemal and Ashwin, for joining us on this quick conversation. So you've heard it first here that, look out for tractors in Q4 coming in. That's our assessment. Quick market check before we get to our next conversation. I am pleased to report that markets have recovered well. Pull up the Nifty, close to the high point of the day, 170 points up. Clearly, the markets are a little more confident about favorable terms of trade with the United States after what the Supreme Court has done. Yes, the Trump administration has hit back and tried to add more tariffs under different sections, but that has not really deterred the street. Just to take you through what is running in the markets right now, what are the stocks that are flying. Adani Ports, almost 3% up, but that is also, of course, because of huge announcements that were made over the weekend. Axis Bank, HDFC Life, SBI Life. So you have a mix of some financials and two Adani Group stocks over there. Adani Enterprise is also about 2% up. Kotak Mahindra Bank, HDFC Bank. Now, the reason you might be seeing large private banks doing well is because there could be an assessment that the losses that IDFC First and AU Small Finance Bank could be facing due to the Haryana government deciding to move their accounts out of these two banks will be a gain for larger private banks. Just go back to the IDFC First script and those that stock really having a tough morning. 18% down right now, has already hit two circuits and then going lower down at this point as well. No reprieve in sight. But in this leg of the conversation, we're trying to understand what is going to be the economic impact of a tariff pullback. Garima Kapoor, economist and senior vice president at Elara Capital, joining in at this point. Garima, very good morning to you. How are you really seeing the impact on exporters? One day there's a 50%, then there's a 25%, then there's a 10%, then there's a 15% in the middle. There was a hope of an 18%. I mean, are you going to see all of this uncertainty actually impact the export number?
Hi, morning. I think this uncertainty is going to reign, particularly because the provisions under which the Trump administration has currently imposed 15% tariff are only applicable for 150 days, post which they have to go back for congressional approval, which looks quite unlikely. Moreover, as the Trump administration tries to understand the implications of the outcome of SCOTUS ruling, they're trying to look at different provisions under which different tariffs can still be imposed, and there are provisions in 338, etc., that can still be utilized. In the interim, when it comes to exporters, remember, India was celebrating a relative gain because an 18% deal that was likely to get signed at 18% rate was supposed to be better than some of our peers. Now, after yesterday and over the ruling of weekend, what that does is that almost everybody is at the same platform rate of 15%, irrespective of where you started off with in terms of negotiation. So the relative gain and relative losses are now nearly wiped off, number one. And number two, we are still trying to grapple with the fact that whether the trade deal will get signed at 18% or 15%, or we might negotiate even better than that. So you would see some bit of an uncertainty both from the importers' standpoint of view in terms of US as well as exporters across the world, including that of India.
Okay, Ajay Sahai also joining in. He's Director General and CEO of FEO, that's the Federation of Importers and Exporters. Mr. Sahai, we were just talking about what is your viewpoint on the latest round of tariffs. We spoke last on Saturday when we were at 10%. It's now become 15%. Are you still finding it as positive as you did on Saturday?
In fact, point is that whether it's 10% or 15%, it's the competition is even out. And probably that will be a good thing for the markets also, and is responding positively. We expect that 15% will provide certainty. And since India will be competing equally in terms of other countries, we will be able to get some more orders also. It's a good development. Let us see how the India BTS span out in times to come, because I personally feel that BTA will provide much more opportunity for Indian exporters. So in short, definitely it's a very good development.
Okay, what are the kind of conversations you're having, Mr. Sahai, with exporters? What are your exporters saying? What are the conversations they're having with clients over the last couple of days?
So in fact, this is wait and watch situation, because importers are also assessing the situation, and they are looking into the development which is happening on day-to-day basis. So as of now, it's a wait and watch. But the good thing is that since a lot of importers are looking into refunds of the taxes to flow, that will also help the Indian exporter, because they have an understanding with the US importers that since they have shared the benefit of the duties, whenever the refunds happen, they will also be getting their own share in that.
Mr. Sahai, a quick view in terms of the way, all of these companies are trying to do business with the US, because there's a constant back and forth. There's a constant change when it comes to tariffs as well. So planning in terms of capex, planning in terms of, forecasts as to what that year could look like is becoming really difficult. In that kind of a scenario, is US as a market companies are looking to ignore now?
I don't think US is a market which you can afford to ignore, but at the same time, companies are looking into another market, particularly in the sector where we have leveraged out to the US beyond a point. And that's why diversification is happening in some of the sectors like marine. We have been successful in doing the diversification. We have moved to the European Union, we have moved to China, and that's a process. But I think one has to look into that US is such a large market that any industry would not be able to ignore the market, but at the same time, people would not like to keep all eggs into the market, into one basket, and therefore this diversification trend will continue, come what may.
Okay. Garima, coming to you as well, we're talking about the way an impact could come in as an economy, but let's be specific. When you talk about the impact in terms of the Indian rupee, we've seen strength in today's session. What would that mean in terms of the currency and its impact in terms of when you talk about the fiscal deficit as well?
When it comes to the currency, clearly the rupee's brunt was largely being faced. One, because of two uncertainties. One, that India-US deal was not in the sight even as we signed other deals. And second, the funding of the current account was becoming challenged because of the net FDI number remaining low and FPI's remaining continuous outflow. Now, this 15% uniform tariff for now at least clears one thing, that the executive power of the US to basically be little ad hoc and abrupt in nature against a particular country has receded, including the threat relating to, let's say, 25% penal tariff that we were facing because of Russian imports, which was also under the emergency provision. So from that point of view, the headwinds on the rupee that you could now face excessively high tariffs is behind us. So relative gain may not accrue immediately, but relative disadvantage or loss that we were being put across before we agreed to a deal is also not on the horizon. So that's why rupee probably is taking a respite. In any case, if you culminate the possibility of signing a deal with US sometime in the quarter now, along with EU coming into effect next year, and with UK likely coming into effect from April, May this year, we're looking at a completely expanded horizon for India's exports. and a possibility of a shrinking of a current account deficit a year and a half from now. With FPIs looking India at a favorable market, I think rupee should actually see much more respite, and we're looking at ending the current next financial year probably at a handle below 90 sometime by March 2027.
That's an interesting take coming in there. But thank you, Garima. Thank you, Ajay Sahai, so much for joining in. It's always a pleasure to speak to both of you and to assess the kind of impact that you're talking about in terms of US tariffs and the back and forth. But we'll quickly slip into a short break. On the other side, we'll speak to the Citi team in terms of decoding how Q3 has been and what you could be looking forward to in terms of Q4, and if there is an earnings re-rating that could be on the anvil. Please stay tuned for that exclusive conversation only on NDTV Profit.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Where's Tamanna?
I think it was, and you know, this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. Welcome to this very special show where we spend time with the top City team looking at the quarter gone by. And as always, we have the top minds of their research team with us in our studios. Welcome, gentlemen. We have, of course, Surendra Goyal, Head India Research at Citi, Kunal Shah, Director India Banks Financials, who's with us today, Arvind Sharma, Director India Auto and Transportation, and Saurabh Handa, Head India Oil and Gas and Telecom. Welcome to all of you, and thank you so much for joining us. You know, Surinder, before we started the conversation, I was telling you that usually at this time, and I'm sure the quarterly conversation we always have, focuses a lot on performance of individual companies, and yes, we will do that. But this time round, it seems as if a lot of external factors have taken over in the way companies are assessing. Is that something you find happening as well when you're looking at companies, not just from their performance, but how they could be impacted by global headwinds one way or the other?
So, see, that always happens. Like you are, as analysts, as investors, people are focused on earnings. But at the same time, they also care about the sustainability of those earnings. Okay, and that is where I think your question comes into play. And today we are in a situation where there is a fair bit of uncertainty on quite a few things. Firstly, the tariff situation. It's been a bit fluid, lot of changes, and that does impact different companies in different ways. Secondly, you have artificial intelligence as a big topic. It impacts different businesses in different ways, so people are kind of looking at that as well. Is it a tailwind, headwind, doesn't impact the sector, and so on. So I think there are a lot of these factors at play, and which is why investors are focused on sustainability of earnings in addition to what companies have already reported.
So then let's come to that core question. I think it's now widely understood and accepted that earnings in Q3 have been better than expectations. That's something that you have noted as well. I think for the BSE 500, 12% above what the baseline is. Was that an impact of a lower base, or are you seeing tangible shifts in corporate performance?
So, see, when you talk about base, like the way we look at earnings, we're talking about versus expectations. So, ideally, the base should have been factored into expectations because when analysts prepare the forecast, they know what last year's base is. So, the numbers have been slightly better as far as versus expectation performance is also concerned. And what we are seeing is that there are a few sectors where things are gradually improving, right? Be it, say, on the banking side or on pockets of consumption, pockets of industrials, we are seeing improvements. And that is what is really driving some of this outperformance that we have seen this quarter, and we expect that to kind of continue. So if you think about earnings growth for any broad-based index, a BSE 100 or Nifty, it was mid-single digit in FY25. This year should end up being closer to high single digit. And then next year, the expectation is we go into low double digit. So that is what is already built in because it's some improvement in certain parts of the market are visible, and there are drivers, so which is why we expect that to sustain.
So let's get a little granular. Kunal, I'm going to come to you on what you're expecting from financials. Of course, it's a great day to talk about financials with IDFC Bank and AU Small Finance Bank in focus. But what for you is really standing out as far as financials are concerned?
So the most important aspect is on growth, and if we look at it, say 12 months back, no one expected that we could end closer to like 13-14 odd % kind of a credit growth for this year. So when we look at it, the latest fortnightly credit numbers that showing a decent traction on the credit growth, and asset quality has also been quite stable. So when we look at the credit cost across the board, there has been the improvement be it in terms of the unsecured loans, delinquency buckets, and the overall credit cost has been sustained at a lower levels. Margins is something wherein the trends have been quite divergent across the board, but again with the repo rate cycle almost being in the ending phase, to that extent now the pressure on margins post the fourth quarter would also be quite low. So maybe if you really look at it, one particular aspect would be on the growth, further supported by maybe contained credit cost, as well as now margin volatility coming to an end.
What are some of the winners? I mean, Axis, for example, again, there was another set of provisioning which, the street was wondering what's happening. HDFC Bank, and I'm talking about the big ones because people look at the large bellwethers, so to speak, in that space. HDFC Bank, I think, was a mixed bag, maybe in that sense. Where do you think the winners lie? And if I broaden the question to the BFSI bucket, are private banks looking stronger or NBFCs after this quarter?
So private banks, when you look at it, Axis past couple of quarters on the core performance side, be it with respect to the overall loan growth as well as the credit cost trajectory on the core side, that has been better than expected. On the other hand, HDFC, as you mentioned, I would clearly believe like it was a decent earnings this quarter. It was not a mixed bag, but it has outperformed. So
okay, let me rephrase that. I think versus an ICICI Bank, because they usually are looked at together. So maybe ICICI Bank shown a little brighter, if I had to rephrase.
But like HDFC was the one wherein you actually saw 9 basis points of margin expansion. It was flat for ICICI and Kotak this quarter. It was lower for Axis this quarter. So HDFC is outperforming on margin trajectory. Their credit cost was also contained. And when we look at it in terms of the growth, it is closer to the industry average, which they have guided for this fiscal. Now, the apprehension on the street is, will HDFC be able to deliver outperformance on the credit growth, given that their LDRs are already closer to 98, 99 odd %. And our belief is the traction on deposits in the fourth quarter will give a lot of confidence to the street that they might be able to outperform. And governor in the press conference has clearly highlighted that LDR is not the ratio to look at. In fact, they are more looking at LCR and NSF. And to that extent, I would say that LDR will not constrain the overall loan growth, and HDFC can outperform the street expectations on the loan growth side.
Okay, and the point about NBFCs?
And NBFCs, I would say stocks are already expensive. The growth is already priced into the valuations. The rate cut cycle benefit, which was more there for NBFCs, that coming to an end. So there are limited plays available on the NBFC, which we prefer at this point in time. And our preference would be more for private banks compared to NBFCs.
Okay, and I assume HDFC Bank is topping that list.
Yeah.
Okay, all right, Arvind, let me come to you. And I think if I were to look at one sector which saw a lot of headwinds because of what's happening globally, that way financials more secure, right? Domestic play. It would be autos as well. Any clear winners there?
So when we look at the demand perspective, I'll start from domestic fronts. The companies which are more exposed to domestic demand, they have been clearly winners in terms of volumes. We get a monthly set of volumes. In fact, retail volumes are even more frequent. So domestic oriented companies have been doing quite well when you look at the volumes across passenger vehicles and two-wheelers. And in our preference order, we do like passenger vehicles which are more exposed to the domestic sector. In terms of the global headwinds, as you highlighted, some of the exporters, especially on the auto parts segment, they have been more exposed to it. So when you had an increase in the duties or when there were geopolitical issues, some of those exporters were impacted. And now again we are in a bit of an uncertainty. But if we do have a decline in a cut in the tariffs, those exporters will benefit. Most of them are part makers. As far as the OEMs go, the two-wheeler names which were exporting to countries in Africa, LATAM, ASEAN. They have been doing quite well. So there, thankfully, the tariff uncertainty hasn't been there. There are, of course, other uncertainties regarding regulations or geopolitics. But at least the tariff part, they have been better off compared to the part makers which were exporting to the US or Europe.
How are you looking at Tata Motors PV? It seems to be two companies in one. In the sense of just wondering how you assess that company, because there's one part which is really ailing, which is Jaguar Land Rover business, and then you look at the domestic play, they're doing fine. Is that something that you think needs to be looked at in a more granular fashion?
Absolutely. I mean, these are two very different companies, two geographies rolled into one company. The domestic part is doing very well for Tata Motors. Some of their new models have done exceptionally well. They have had very good customer response. In the EV segment especially, some of the models where the brand name remains the same but you got an EV powertrain as well, they have been well accepted. So the domestic business is doing very well. The concerns are more on Jaguar Land Rover, which has got a much wider geographical expanse, across US, Europe, UK obviously, Asia and China. There we are a little cautious. There are different headwinds, and because you are selling to so many geographies, each geography would have its own share of regulations, competition, economics, taxation. So I think there is a bit of caution.
Plus bad luck this quarter with cyber attacks and this, that and the other.
Yes, I think this was well known. It started last quarter. They had already guided to the impact this quarter in terms of the units. So to that extent, when we started the quarter, built in the expectations, we were penciling that in. Going ahead, I think there's one more transition that's happening. Jaguar would be all electric. Even Land Rover, lots of models would be turned into electric. How does JLR perform in a more electrified world, especially on their own model portfolio? I think that's again a bit of uncertainty that lies ahead. But for Tata Motors per se, the Indian operations, they are doing quite well.
No, but then that's fine. How do you assess the company then versus its peers? Its sum of all parts then becomes less favorable versus, say, an M&M if you're looking at an EV play, or a Maruti even, or Hyundai even. Hyundai, lots of upgrades this quarter.
Absolutely. So our preference order is Maruti, Mahindra and Hyundai in that order. So naturally we like the Indian peers more. We have a sell rating on Tata Motors.
Okay. And in the two-wheelers, just to round that off?
Absolutely. Two-wheelers, we like Eicher Motors a lot. It's a very differentiated company. Is not bogged down by competition. They have clearly shown that.
No impact of Harley.
Yes, I mean we had two marquee launches, global launches happening within a space of 2 weeks of each other a couple of years back, and Eicher Motors still is almost dominates that segment. So Eicher Motors is a company which we really like. We are a little cautious on the other two-wheeler names. We have a buy on Hero, but we are otherwise cautious because there is so much competition, and the differentiating factors in two-wheelers are not there, are not as much as PVs. In passenger vehicles, you can differentiate on ergonomics, HVAC, noise, vibration, harshness, the design of the car. In two-wheelers, it's a little difficult to differentiate, so we are more cautious on the two-wheeler names.
Are you tracking Ola, Ather at that space at all?
So we cover Ola. We have a sell rating on Ola.
Yeah. Sorry, I'm just following up on this because this has been so much on top of mind. Any cause of concern? There was one research firm, which put out a take saying we don't know if this is going to be a going concern.
I think we'll not comment on that, but the broader electrification in two-wheelers has been very sluggish. We are at around 6.2% electrification, same as we were an year back. And of course, expectations were very high. So to that extent, electrification has been sluggish. For Ola specifically, they have been losing a lot of market share. There were various reasons, product, service, perception, lots of reasons, but they've been losing market share. So we are cautious on Ola because of broader sluggishness in industry electrification and Ola's loss of market share.
Yeah. This is such an exciting set of people to talk to viewers, and I think we can speak to each of you maybe for 20 minutes to go because there's so much happening in each of your sectors. But we will try and give an overview to the best of our ability. Saurabh Handa, again, oil and gas and telecom, two very different pieces. I'll start with oil and gas. All things considered, and with what is happening with crude, is there growth potential? Yes, your take on what the quarter went by and the performance there, but is there potential for more turbulence?
Okay, so in terms of the oil markets, there's clearly a fair bit of geopolitical uncertainty, and if you've seen the recent move in oil prices, they're up almost $10, I would say, in the recent last few weeks. A large part of that is because of the situation in Iran. Now, at least our house view is that there is a fair element of that risk premium already, which is embedded into the oil price now. Our broad range of oil prices is somewhere around $62 if there was to be no sort of geopolitical risk, to around $75.
It's just the width of that range.
Exactly. So
answer, you're talking about $13.
Yeah, so we are pretty much at the top end of that range right now.
Yeah.
I mean, $72 overnight, it's down a bit. The point I was trying to make is I think we're sort of at the higher end of that band, so to speak. Because if you look at the fundamentals of global oil markets, it's still a reasonably well supplied market. There is spare capacity in the system. The fact is that barring some sort of severe disruption, we do not believe there's going to be a major impact on oil supplies. So in that situation, excluding the risk premium that is embedded, we believe there could be downside to oil prices, or at best it stays range bound. In that sort of a situation, it still, in our view, favors the downstream companies over the upstream names. In fact, if you see the relative price action, the OMCs have corrected recently. The upstream stocks have actually moved higher. And we believe the reverse can happen now if we are at the higher end of that range. So we have a preference now for the OMCs.
And what's the pecking order there?
So in the OMCs, we like, so we have buy ratings on all three. Our preferred pick there is BPCL, then HPCL and IOCL. So BPCL is a bit more of a balanced play. And therefore our preference is for that at this stage.
And your take on this Venezuelan oil business? Obviously, what has happened now, it's all become very tangled geopolitically, right? With some Russian crude coming off, Venezuelan coming in. Which are the Indian players that can really be ahead in the race if we need to start now getting in Venezuelan oil? And net, is it a positive for us?
Okay, so in terms of, so Venezuelan crude tends to be of fairly poor quality. It's a heavy crude, so the refineries that can process it have to be extremely complex. So Reliance is one that can process Venezuelan crude. And media reports have been suggesting that they are looking at procuring some barrels there. I think the way to look at it, however, is that ultimately, as long as that oil is available in the market, and earlier Venezuelan crude, say, was being bought by China, and India was buying more Russian crude, and if there is a little bit of that replacement happening where India is reducing its Russian imports, but managing to get some Venezuelan crudes, and China is actually making up the slack from India as far as Russian imports is considered. Ultimately, this is just redirection of oil flows globally. So it does not really lead to too much of an impact in terms of availability of that crude. Yes, it could impact your freights. There could be a little bit of that risk premium which starts coming in. But as long as there's no supply disruption, the impact is only on differentials. So if you are a complex refinery which has the ability to process discounted crudes, then you are better off. So Reliance could be one. Even the OMCs apparently are looking at procuring some Venezuelan crude, but the quantum is going to be much lower. I mean, Venezuelan exports are less than 1 million barrels per day. Russian exports are more than 3 million barrels per day. So there's a big difference in terms of the volume itself.
Yeah, I think it's a work in progress, and that's something the Indian oil chief also told me when I spoke with him last, that yes, we can do it, but we need to figure out how. I'm tempted to quickly squeeze in a question on Vodafone before we move on to the others. There seems to be a change of heart in the way the street is looking at this stock because the promoter seems to be coming in. Have you had a change of heart when you're looking at Vodafone?
So, so we did have a change of heart, so to speak, some time back. So where we had gone to an overweight, like a buy rating on the stock. We, however, do believe that there is certainly an element of high risk associated with it, given the high leverage that is there on their books. But yes, there seems to be a clear improvement in their situation. Probably an indirect beneficiary of Vodafone's improving situation and the fact that the Supreme Court has sort of backed them, the government has provided some relief. We would believe the TowerCo like Indus Towers is a clear beneficiary out there. So we have that as a stock which we have fairly high conviction on, which we have been pushing. And I think the concerns, or the existential concerns on Vodafone Idea, I think are clearly now behind us. Clearly, they are now looking to raise some funding from banks. That should happen sooner rather than later, following the clarity from the government on the whole AGR thing. In their strategy review, they do have a fairly ambitious and aggressive capex plan over the next 3 years. So all of that, I think, should help lead to some sort of stability in their operations. Obviously, a lot will depend on execution. which is why at this stage we believe it's better to look at, say, indirect beneficiaries.
Like Indus Tower. That seems to be the consensus. So now let me come back to and let's broaden it out. We've got some great inputs, on sectors and specifics. One, looking forward to what we may see in Q4 and for the FY in light of everything that's happened with tariffs. If I look at it from investor point of view, everything that you would have wanted has pretty much happened. You've now got the trade deal in place, rupee is beginning to recover perhaps. Do you think that we're set for a positive momentum from here on, even with what has happened in the last 48 hours?
Sure. So if you think about what resulted in the big underperformance of India in the last 18 months, there were a few factors. Firstly, earnings slowdown.
Yeah.
Last couple of years, like FY25 was mid-single digit earnings growth. This year, now we are getting to high single digits. So earnings definitely slowed down. And prior to that, for 4 years, the growth was 18-20%. So versus expectations in FY25, there was clearly a negative surprise. So that was the first tipping point where you saw foreign money starting to outflow, the market starting to underperform. Then secondly, the whole tariff situation where India, the perception initially was India would be a big beneficiary relatively, and India ended up with high tariffs. Okay. And third has been the AI trade. It's been like the single biggest trade in the global markets in the last whole of last year, this year. And companies which have, countries which have companies which are more exposed to that have generally done well. Right, in the US, you could look at Mag 7, you could look at Korea and Taiwan in Asia and so on. You will see markets that have done well. So today, when you think about some of these factors, right, first thing I would say is from an earnings perspective, we already discussed earnings are looking slightly better, right? Mid-single digit, high single digit, going to low double digit. That's point
are
one.
Indian IT companies going to survive AI?
I'll come to that. Maybe I'll answer that later. The second thing is from a trade perspective. We have more clarity, at least compared to where we were, that India is not a relative negative from that perspective. Okay. And third is we have seen the foreign flows kind of starting to stabilize a little bit. So all of those things are in favor. What is still unknown is the AI trade, because that is what has been taking a lot of money. On your question on IT services, I think I wouldn't really frame the debate like that. Are Indian companies going to survive or not survive? For us who have been negative on the sector for a fairly long time, it has been around multiple issues. I think the question is around growth rate. Okay.
Let me add the perspective of valuations.
Yeah.
They will survive, but are they worth what they're trading at without the AI heft?
No, absolutely. So the reason we have been negative on IT for the last 3-4 years, like even today, I don't have a single buy rated IT stock. And the reason we have been negative is there are a bunch of things which are not good for the sector, right? AI has been a concern only in the last, say, 12 to 18 months. But prior to that also, you have had issues. It's an intensely competitive industry, lot of players, and the underlying growth has been slow. So that issue is also there. Margin pressures are always there because it's so competitive. And the starting point valuations were much higher. Now they have obviously moderated. But overall, if you see at best a mid-single digit growth, okay, then how much should you pay for it? I think that is what the question boils down to. And you can see that globally, if you look at the US, some of the IT services companies are trading at significantly lower multiples, while in India, the domestic liquidity still keeps them more supported. So I think that is the single biggest question which people are trying to answer. What is the right multiple? Like for us, we have been negative for years, and at least for now, we are still cautious because we think that the earnings outlook is fairly tough. And within that, valuations are not cheap enough.
When you are applying a potential AI filter, we had this whole summit, a lot of things that have been announced, data centers and all of the ancillary around it. When you're applying a potential AI filter to, say, the BSE 500, are you seeing enough things or enough opportunities pop up?
So there will be two kinds of opportunities which will pop up. The first kind of opportunity is essentially the data centers will require a lot of companies to participate. And there are a set of companies which have done well, which continue to do well. In our view, they'll continue to do well, which are plays on that theme. Some of them are in the industrial sector, obviously. So that is one part. The second is companies which can leverage AI, Okay, and I think that will be a bigger trend in India. I think we'll see a lot of companies leverage AI to generate a lot of productivity and improvement in growth, etc. So we are starting to see the financial companies start using AI more aggressively. Again, a medium-term play, but I think you'll see a lot of those opportunities visible in the next couple of years.
Yeah, you know, my guesstimate is after what's happened with IDFC first, you're going to see a huge AI play to avoid frauds in the future. Quick take on that, Kunal?
So, interestingly, when you look at it, it was not a digital thing, but it was more of a traditional
good old fraud.
Yeah,
Forge,
so maybe
forge
it
a
was
check.
like the check issuances and not really the digital one which happened. And there was a connivance of external parties along with the employees of the banks also involved into it. But yeah, so this had the impact. We are already seeing that in the stock price of both the banks which are involved. And the directive which has been issued by Haryana government, that's very clear in terms of preferring PSU banks with respect to opening up with of all the new accounts. And if you are not opening an account with PSU banks, there has to be a specific reason as to why you are not doing that. Okay, so for all the new accounts, Haryana government has directed that it has to be with the nationalized banks going forward. Even though Haryana government as such, as a proportion of overall government deposits, that's closer to 2.7%, and as a proportion of overall banking deposits, that's hardly 0.2%. So it doesn't impact much in terms of the quantitative term, but we need to see in terms of whether there is a potential contingent impact with respect to other state government
will others
doing,
follow?
yeah.
No, my point is that maybe this is where there's a clear case for AI to come in and help prevent frauds like this potentially in the future, because the human imperative to commit fraud is not going to go away anytime soon. Well, we'll wrap it there. We're right out of time, but thank you so much, gentlemen, for coming into our studios as always, helping us review the quarter gone by and also a lot of commentary on what's happening right now. Thank you. It's been an absolute pleasure.
Thank you. Thank you.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru. Whoa, whoa, whoa.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Javeri. It's good to be back. It's been a while. And with regards to where the market stands, of course, slightly, on the positive note today, of course, on the back of the development that has happened over the weekend with regards to the tariff, rates coming in. The Nifty 50 is up around 0.5 odd percent. The Bank Nifty also in the green, up by about 0.15 odd percent. But overall, if you take a look at the Nifty 50 constituents and of course the counters that are doing well in trade, you have Adani Ports leading that chart, up 2.7%, followed by something like an Axis Bank, up 2%, HDFC Life, SBI Life, as well as Tata Consumer and Eicher Motors, as well as Adani Enterprises and Nestle are doing fairly well. All of these counters up by about percent each. So there's more green on that heat map as we speak as compared to the red. But on the flip side, Wipro continues to be under pressure, down by about 2 odd percent, followed by ONGC, which is also down 2% today. Infosys, Tech Mahindra are the other two IT names which are down by about 1% each, and you have Eternal as well as Trent, which is also seeing some pressure in trade today. So that's with regards to where the Nifty 50 stands. Let's try to pull up the sectoral heat map and see as to how sectors are looking like in trade today, and how Nifty PSU Bank continues to lead that pack, up 1.6%, followed by Nifty Auto, which is also up almost 1%. But on the flip side, IT continues to be under pressure, down by about 1.5%, and you have your media, which is also down by about 0.4 odd percent. Quickly, let's try to pull up the advanced decline ratio, because that will paint a picture as to how the broader end of spectrum is looking like. If we can try to pull up the advanced decline ratio, you have around 1242 odd, you have 1321 odd advances versus that of decline. But interestingly, Puneet, the chart is narrowing by the hour, and we're seeing some pressure in terms of where the broader end of spectrum is concerned. But overall, what are the broader end of spectrum? What is the broader end of spectrum looking like?
Well, very interesting, because the broader markets, the advances are declining, but we are actually building up in terms of gains on the benchmark. So that's a consistent trend that we are seeing, and a divergent trend actually in that sense, to be honest, because we're seeing the gains largely about 80 points at the start of the trading session for the Nifty 50, and then build on from that. And finally, just if you can pull up the BSE 500 to talk about the individual movers before we take all your stock related queries for today. CI Automotive post earnings have been consistently in the green, and today as well, that's visible on the screen. Trident, a beneficiary of what we are seeing over the weekend in terms of the US Supreme Court striking down the tariffs as well. So the exporters are up today. And essentially the casualty, the accident of the day, IDFC First, down almost 15% now as we speak, and continues to be one of the key stocks that we are focusing today as well. But let me welcome in Avinash Gorashakkar. He's the founder and head of research at Avinash Mentor on the fundamental side to solve all your stock related queries. We also have Gaurav Sharma, associate VP and head of research at Globe Capital. Gentlemen, both of you. Thanks so much for joining in today. Let me first go across and take the first caller for today itself from Vijayawada. This is Bindu dialing in for a stock query. Bindu, very good morning. Welcome to Ask Profit. What's your query?
Very good morning. So I hold sovereign shares of Vishal Megamart at 121. Hello.
Yeah, Bindu, I can hear you. Go ahead.
I want to know about the medium-term outlook of the stock.
Medium-term
should I
outlook.
hold or
Okay.
should I keep a stop loss and exit?
Got it, Bindu. But let me actually go across to Avinash now very quickly. Avinash, Bindu's holding Vishal Megamart at at 120 odd levels. What would you recommend her to do? Because seen some correction this particular stock, but any view of what she should do?
Yeah, good morning, Punit. I think as far as the investor is concerned, I think she can continue to hold. See, I think Vishal Megamart had come at a price around, I think if I'm not wrong, around 83, 85 rupees, and has been delivering very strong numbers quarter on quarter. In fact, in the retail segment, it is one of those players which operates largely in the tier 3, tier 4 markets, and where basically pricing is very, competitive. They managed to hold on to a very strong customer base, show strong volume growth, and decent kind of margins kind of in this business. So I would say that the fourth quarter typically is supposed to be a very large quarter for Vishal Megamart. So you should expect a decent performance. Even in the third quarter, numbers have been decent. So my sense is the investor has purchased at around 121. Now the price is around 116 odd. There's nothing to worry, but I think in this kind of market, it may take a little bit time before the market sees the potential of this company. So keep a time frame of at least 6 to 12 months. I think a decent risk reward can be expected. The company is doing well. The management bandwidth is also good. So I would say that within the retail space, I think the investor here should hold on and keep a time frame of 6 to 12 months.
On Vishal Megamart is the view coming in from Avinash. In fact, they're also adding a lot of stores as we speak, and we'll have to wait as to how the implementation of these stores take place. But moving on to the next question, Satyan is writing us and asking about Morpin Labs. He's holding at the rate of 60, if I'm not wrong, and today it has jumped. Of course, this is on the back of the news flow coming in. It has gotten 825 crore CDMO mandate from global pharma major, and that is why we're seeing the jump in the counter of that 13.5% as we speak. He wants to know as to what he should do next. Should he average? What is the best strategy to adopt? Gaurav, I'll take this up with you. What are the charts indicating for Morpin Labs?
Hi Mahima, morning. Thanks for having me today. So yes, a good smart up move of 13-14% has already been seen on back of stellar volumes. This is a welcome move, reversal, a clear-cut reversal sign is visible. I see the stock heading towards 48 odd levels in the immediate near term. Once these levels are taken out, the stock will head towards 52 and higher levels. Therefore, he should hold on to his position, and if he's having some spare cash, even he can consider adding it as well.
The view, Gaurav, and welcome to the show. We have, the next question that's coming in from Satish Jain from Bengaluru. Now, he is unfortunately holding shares of IDFC First, and definitely one which is under pressure today. He's asking firstly why it has opened 15% down. Now, we've been discussing on the show, Satish, that there was a fraud reported of almost 590 crores in Haryana, and hence the stock's down and out today. There was a con call as well in the morning. And, Mahima, you listened to the con call, but a couple of key takeaways before we take the question.
I think the key takeaways were that, they have taken the ownership of this first thing, and they've said that they'll figure out as to how the forensic report comes out, and they will then accordingly decide as to how the treatment of that 590 crore, which has been identified as the financial impact right now, will be treated going forward. But it'll take 4 to 5 weeks as to, for the forensic report to come out to exactly determine as to what is the financial dent for the company. So that's, the overall summary and key takeaways from the con call. But yes, I'll take this up with Avinash quickly. I think it's important for him to kind of address this. Avinash, how should investors who have patiently been invested in something like an IDFC First Bank read into this?
No, I think Mahima, the management has clarified that this is a kind of a fraud which happened at the Chandigarh branch, and I think whatever it may be, the bank is taken responsibility for this, and I think you could possibly see that dent being provisioned in quarter 4 numbers. it's definitely a sizable number, and that's the reason the stock is down by almost 15-16%. But I think, once this event has happened, I think the markets would now look at what kind of growth prospects the bank is likely to do over the next, say, 2 to 3 quarters. In the short term, the stock has corrected now quite significantly. I think a 15% or 16% drop is now already factoring in that kind of damage. So I don't think you're going to see a further damage. My suggestion is, rather than selling in panic, probably wait for some more time here. I think the fourth quarter numbers would be out. You'd get to know the management commentary. And I think in the longer term, yes, this would be neutralized, but in the short term, some pain will continue. So my suggestion is, don't sell in panic, continue to hold and wait for the Q4 numbers. I think hopefully this should not be a continuation going forward.
In fact, the management did indicate at the end of the call saying that they're expecting a strong Q4 coming in as well. So that's the view with regards to where IDFC First Bank stands. We've got our next caller. Shridhi is calling us from Hyderabad. Shridhi, hi, a very good morning to you. How can we help you today?
Yeah, hi Mahima. Firstly, kudos to the team. I love both of you, Mahima and Puneet.
Thank you so much.
Yeah, and so I have firstly, so my query is specific to Inox Wind, but I have a broader query where there are managements who are mentioning that they are going for capex and client acquisitions. Their YOY numbers are also looking good, but the stocks are continuously falling. I have like 3 to 4 in my portfolio. For example, there was Sky Gold, there is Zaggle Prepaid, and now Inox Wind. My question. So my whole point is this. I mean, I'm constantly averaging out just because I can see that they are client acquisitions or capex, but the stock price is actually going a 180. So I just want to understand why does that happen in general, and if Inox Wind in this particular case.
Got it. Got your question, Shridhi, and thank you so much for those compliments. It really made our day. I take this up with Avinash then. Avinash, what's the view like on Inox Wind? As he mentioned, he's been averaging out. The company has been doing capex. The stock price is not picking up. What is your view here?
No, I think my guess is that, I think capex is being done by the company. I think markets are expecting a decent kind of revenue kind of, generation, from the capex. And I think, the fact of the matter remains that wind power, long term is definitely a very good structural story. But somehow the numbers have not been coming, and that's the reason the markets are disappointed. So I think, we probably will like to wait for the Q4 numbers. The company is backed by a very solid business group. They understand this business very well, and the order book is also quite good. So once the execution gets reflected in numbers, possibly in Q4, I think you could see a good bounce back. So I think, rather than selling in panic, I would suggest continue to hold. But yes, I think longer term, yes, the business continues to be promising because wind energy is one source of energy which the government is also promoting. So I would say continue to hold, but I think fourth quarter will be very critical to know whether the bounce back comes or not.
Got that view, Avinash. But the next question is on IEX now. Gaurav, this one's coming your way. Our viewer, Ghana, and I'm hoping I'm pronouncing his name correctly, is holding roughly 1,000 shares at 152. He's asking a short-term view on this counter. What would you recommend?
Yeah, Puneet, IEX stock is reeling under pressure from quite some time now. After that news came in of that fraud thing, this is under pressure, and all recent attempts of recovery faded out. As of now, too, there are no meaningful signs of any decent recovery coming in. I'll suggest better to reduce or cut down the positions at the current market price and switch over to some other quality names.
Okay, all right. So that's the view coming in on IEX. The next question that we have is from Sagunakar, who's writing us from Vijayawada. He's holding 300 odd shares of KC International at the levels of 780. Currently facing a loss of around 25%. Should I book loss or maybe average out or continue to hold is the question that he has. Gaurav, I'll stick with you for this one as well. What's the view like?
Some more pain is likely here, Mahima. 550 is the level that I am seeing that the stock could come down in the recent move. Therefore, considering the overall chart patterns, 550 should act as a decent support. So I'll suggest him to hold on to his position.
Got that view, Gaurav. But the next question that's coming in now, it's on Angel One. Now, this particular space has also seen a lot of pressure. The STT raise was definitely a big kicker for all the capital market players. And, our viewer G. Shrikant from Tamil Nadu is actually holding shares at 1,200 rupees. So, he still bought it at a relatively earlier price, holding 77 shares. And Mr. Srikanth, if you can call us, let us know what you saw in Angel One at 1200, because it's definitely been, a doubler at least for you in that sense. He's asking what he should do with this particular stock now that, there's also a stock split that is on the anvil, is what he's suggesting. Asking his view, Avinash, just based on the price that he's bought at, would you recommend him to book some gains, given that the government seems to be very serious on reducing the volumes in the F&O space? What would you recommend?
No, Puneet, I think he's purchased the stock at a very good level. So I think he should definitely book out some profits and encash his capital. But I think you should understand one thing, that despite the restrictions on the F&O trade, I would not be surprised that volumes are not going to be impacted significantly. Maybe in the short term, there could be a little knee-jerk reaction. But I think, all of us know that the F&O market is something which is growing, and where, traders definitely finally look at the risk reward. So the cost of transactions has definitely gone up post the STT increase. But I would say that, if the investor has a long-term trajectory of next 12 to 15 months, I think the capital markets are one area where a lot of interest is coming in, both on the investment and the trading side. So longer term, the runway is very large. So I don't think it's going to be a very big negative for the, broking business as a whole. So I think he should continue to hold, part book profits, and, try to encash the profits which he has made.
Okay, all right. So that's the view coming in on Angel One. But, switching focus and, speaking of the F&O space, it's time to look at what the F&O market is looking like today, what the setup indicates, and what are the cues shaping up for the trade. We have Sharad joining us to break that down for us. Sharad?
All right. Welcome back, Mahima. And largely we see the opening which was there in the gap up is not sustaining. We'll see largely the sell-off is coming in, but of course from Sensex, Adani Ports is leading the pack. It's up 2.5%. Kotak Mahindra Bank, Axis Bank also showing strength. Interesting, Reliance is also in the green. Overall, the technical setup is fine, but we could say net some kind of a little correction has definitely happened from the day's high as well. But what's not working is the IT sector. That sell-off is continuing, and of course JP Morgan also came out with its important downgrade as well. Stock specific moves, it's largely bigger moves coming in. Long build up, let's put out which stocks would be in focus when it comes to the long build up. And these sectors, if you talk about it, you just show the long build up. This is Indian banks and Cummins India. Remember, Cummins India came out with this analyst meet also, where a bullish momentum was there, and we had mentioned in IMO about the technical setup of the capital goods as well. Short covering at play for Union Bank and Amber Enterprises, and long unwinding, though the volumes are kind of mixed, is for Bharat Dynamics. This is where there is a sell-off happening in defense stocks, but AU Small Finance, the bank, that's one of the biggest accidents of the day. That's down 7%. But even bigger accident of this is, of course, IDFC First Bank. If you could see the short build-up happening, that fell almost, you could say, 20%, and now minor recovery is definitely coming in. But this is the stock of the day which we'll be tracking all across. And UPL also, that's down almost 14%. Street is not liking its demerger news. So these are the stock specific moves which are happening in F&O space, but these stocks are giving you violent moves.
Okay, all right, Sharad. Thank you so much for bringing us those details. Moving on, we've got Geeta calling us from Bengaluru. Geeta, hi, a very good morning to you. What is the query?
Yeah, hi, good morning, everyone. I'm holding 777 shares of ONGC at the rate of 275.
Okay.
So I bought this for very short term. So today the stock has fallen 2.17% approximately. So I still need to hold, or I have to book a loss?
Okay, can you just define very short term for me? What is the time period that you're looking at?
Maybe 1 month.
Okay, got it, Geeta. I'll take this up with Gaurav then. Gaurav, for the next 1 month, do you see an upside on ONGC?
Mahima, yes, certainly. The stock is doing quite good. It is well placed. Any dip from here should be considered a fresh buying opportunity. The viewer can even add on to the position, average it down on dips. Hold your positions. Take a stop at closing stop at 260. I see the stock heading towards 300 in the immediate near term.
Gaurav, but the next question that's coming in, it's a stock that's been a pain to investors in that sense, and that's Tata Tech. Now, our viewer, is holding this particular counter, Mahesh, and he's asking, he's bought it at 726, bought 67 shares, and Avinash, his question is if he should continue holding for the long term, and largely if there is any upside potential, and should he average? So he's clubbed all these questions together. What would you recommend him to do on Tata Tech?
No, I think if he's looking at the next 12 to 18 months, Puneet, he should definitely add on declines. I think, this business is something which is very unique and where the tailwinds are extremely strong. My sense is that, clearly with the AI opportunity, I think there are a lot of initiatives which the company is also trying out. I think maybe in the fourth quarter, you could get a little more clarity. But I think from a longer term perspective, it operates in a very niche space where the business is growing very rapidly. So I think, if the investor has a long term runway of at least 12 to 18 months, then only he should average. But I think, yes, fourth quarter should hopefully be better than the third quarter.
Okay, all right. So that's the view coming on Tata Tech. Avinash as well as Gaurav, it's time for our rapid fire round. Try to keep your answers as short as possible. The first question is from Ramya, who's writing us from Chennai, asking about Apollo Tyres. She's bought at the price of 513, 150 shares is what she has. Wants to know if she can continue to hold or average. Avinash, your view?
Yeah, she can continue to hold.
The next question coming is on KPR Mill, bought at 1117, Avinash. 41 is the shares that she holds. What she should do?
Here also, I think keep a time frame of 12 to 15 months and continue to hold.
Okay, the next question is on GE Vernova, and Sagar is asking this question. He's holding 7,820 shares. Wants to know if there is more steam left technically on the upside. Gaurav, would you recommend that?
Yes, it is looking very good. He can even consider adding the position. 220 to 230 are the immediate upside targets.
TCS bought at 3,100 odd levels. Avinash, should Mohit continue to hold for the next 3 years?
Yeah, I think he should continue and he can even average.
Okay, HAL is the next one. Samba is asking this question. He's got 4,000 plus shares. Wants to know what's the outlook for short term. Gaurav, your view on the charts?
Not looking good. Some more downside possible. 3750 on cards.
PSU banks, a larger query. Avinash, is it a good time to invest right now? Is the query from Murthy? Which banks would you recommend?
I think today, I think we should look at buying into Bank of Baroda, Canara Bank, Bank of Maharashtra. These could be good bets, in the current scenario.
Okay, the next question is on KPI Green. The viewer is bought at an average price of 490. Is it a good time to hold or maybe average out? Gaurav, your view on the charts?
Not looking good. Take a stop at 380 and remain cautious.
Got it, Gaurav. Avinash, you mentioned Angel One, but a view on Grow as well for the next 3 years is what Nagaraj is asking.
Yeah, I think Grow also should definitely be a good compounder, over the next 2 to 3 years. If he already has it, he should continue to hold.
Okay, the next one is on DW Development, and Bhaskaran is asking this question. He wants to know if this is the right time to make an entry into this counter. Avinash, your view?
I think he should continue to hold. Fresh buying is not advisable.
Sagility bought at 50. Gaurav, should he continue to hold?
Take a stop at 42 and hold your position.
Okay, the next one is on Indian Bank. Rajesh from Indore is asking, he's bought an average price of 649. What is the short-term outlook for this counter? Gaurav?
Very positive. Hold on to your position. Take it trailing stop at 950.
Sterlite Tech bought at 118. Gaurav, should Raghuram continue to hold?
Yes, hold.
Got it. Well, that's the end of the first round of the rapid fire in this edition of Ask Profit. But viewers, stay tuned. A lot more stock related queries on the other side after this very short break.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open. Now in its boldest lineup, This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already, do start sending in your queries on the WhatsApp number that's flashing on the top of your screen. You can also call us, speak to us directly on your stock related query as well. The next one that's coming in is on E2E Networks and it's a short-term view. So let me welcome in Ajit Mishra, the SVP Research at Railier Broking as well. Ajit, welcome to the show. What would you recommend on E2E Networks? Now our viewer Sarthak is holding 675 shares. Bought at 2792. Should he continue to hold for the next 6 months?
Yeah, good morning, Puneet. So, Puneet, it's been almost 1.5 years of volatile swings that the stock has been experiencing. Downside 1800 is the immediate base, where 3400, 3600 is the hurdle area. We were very close to the upper band of late after this recent surge of or a rebound. Today, we are seeing that the stock is down by roughly around 8%. Volumes are okay. We feel that this kind of volatility is difficult to handle if the view is very short term. And since his time horizon is 3 months to 6 months, I guess he can continue to hold his long positions. 2200 is now the immediate base. So with that as a stop loss, positionally he can hold with 3700, 3800 as a positional target.
Okay, all right. So that's the view with regards to where E2E network stands. We've got our next caller. Ram is calling us from Vadodara. Ram, hi. A very good morning to you. How can we help you?
Hi everyone. In my budget there is two stocks are there. One is the Borona Waves. 69 stocks are there. Purchase rate 216 and Belrise Industries 50 stocks at 99.23 rupees. So query is, should I need to hold or can I book profits?
Okay, so Ram, we have a policy of taking only one query per viewer. So you'll have to choose between Borana Weaves and Belrise Industries.
Yeah, go with the Borona Waves.
Borana Weaves. Okay, I'll take this up with Avinash then. Avinash, your view with regards to Borana Weaves?
No, I think Borana Views he can continue to hold. See, Mahima, this is a company which has gone public about a year back, but numbers have been very strong. In fact, last year they made a profit of 42 crores. This year, I think they should end with 55 to 60 crores of PAT. And I think the management call, after the Q3 numbers has also been quite encouraging. Their expansion has also started. So the real benefit of the expanded capacity will be felt in FY27. So I think, the investor has purchased a good stock. I think if he can hold on for the next 6 to 12 months, a further better risk reward is possible. So continue to hold.
Got that view, Avinash. But another caller coming in from Bengaluru, and Venkat has a stock query for us. Venkat, very good morning. Welcome to the show. What's your query?
Yeah, very good morning to you, Puneet and Mahima. In fact, I have got a query regarding Infosys. Okay, I'm holding Infosys and Tech. But the query for Infosys is I'm holding 75 number of stocks at the rate of 1,700.
Okay.
Okay. And I've been holding for about a year or plus. And I've been keeping on listening to your channel, wherein both, the gentlemen like, Parag Thakkar and Kush Bora, they were telling it's a knee-jerk, thing is happening over there in the IT industry.
Right.
I need not bother, so I didn't sell it.
Right.
And will it still fall or no, I can hold it for about maybe 5 to 8 years time?
Got it. Venkat, you
What
bought
the
it
outlook it looks like?
Got it. Venkat, you bought it at 1,700, right? Is that correct?
Yeah, that's right.
That's right. Okay.
1,700.
Got it. Avinash, let me come to you because, IT has been a very disputed space, lot of queries on that. Should Venkat average right now, continue to hold? What would you recommend?
No, I think even if he has to average, I would say that it's better to do in a piecemeal method. There's no need to hurry. I think, the stock is weak in the near term, but longer term, I think the AI kind of scenario is not going to impact it significantly. In fact, my sense is if the investor can hold for next 12 to 18 months, he could definitely expect a decent risk reward. Typically, they've already signed a JV with Anthropic. So, basically the company is making efforts to now look at the AI challenge in a more rational way. Numbers for fourth quarter, I think, are going to be critical. But I think most importantly, the investor should realize that it's already got a decent order book, a lot of cash on the book. So it's not a business which is going to disappear. So I think if you got the conviction for the next 12 to 18 months, average at the current level and stay invested. Volatility will continue in the short term, but longer term, I think once this AI scenario scare goes away, business will be back to usual.
Okay, all right. So that's the view coming on Infosys. We've got our next question, and this is coming in from Bhavani, who's writing us from Chennai, asking about Jyoti Labs. She's got 50 odd shares at an average price of 251. Wants to know if she can hold, sell, or maybe buy more from a long-term perspective. Avinash, I'll stick with you for this one. What's the view like?
From a longer term perspective, this company operates as a very large dominant player in the FMCG pack. I think FMCG businesses are growing slowly and steadily, backed by good rural demand, typically, low GST rates, low interest rates. So I think, the investor needs to stay invested here for at least the next 12 to 15 months. A good business, but I think the stock will move slowly. I mean, it's not one of those stocks which is a very high alpha stock, but yes, you can definitely expect a decent risk reward over the next 12 to 15 months.
Another caller now dialing in from Chennai, and Meenakshi has a stock query for us. Meenakshi, very good morning. Welcome to the show. What's your question?
Yeah. Good morning, sir. Actually, I'm holding Ola Electric shares, 200 shares at the rate of 102.8. I just wanted to know whether I can hold it or put the loss, sir. Thank you.
Got it, Meenakshi. I'm wondering who to go to for this question because the fundamentals definitely not supportive at this point of time. But Avinash, let me just come back to you because she's bought it at 100. Stocks almost down 75% from those levels. What would you recommend her to do from these? Is it a good time to book your loss, move out, or somewhere around 2022 it becomes attractive, maybe in terms of EV to sales metric or market cap to sales? What would you recommend?
So Puneet, this is really a very difficult question because the investor has lost a significant amount of capital. But my sense is that I think at 25 rupees, maybe the downside is at least capped for the time being. But definitely, if you ask me honestly, how the investor will make money here, it all depends on the performance of the company. I think performance in the Q3 number has been extremely bad. The losses have increased, the volumes have come down. And I think the most significant negative part about this company is the narrative has always been strong, but the numbers have never been delivered. So my sense is maybe another quarter she can wait, but I think otherwise, hopefully, if she gets an upside, it's better to exit because in these companies it's very difficult to quantify what kind of risk reward may happen after the stock has corrected by almost 75-80%.
That's definitely bold of you to say that it could be something to look at after whatever has happened. But Ajit, I can't let you off the hook with this one. Your view on Ola Electric, is this the bottom?
Puneet, I see this as a gradual or a grinding decline. Stock is at the record lows. If you form a channel joining the us to major lows, maybe close to around 22, 21 is the area where it might find support. But are we going to see a very strong recovery post that? It's still very doubtful because we are still seeing decent volumes during decline. So those people who are stuck at higher levels earlier, they were anticipating a bit of a relief. I guess they are liquidating their position. So maybe around 22, 21, it might witness a breather. 30 is going to be the very strong resistance area in the immediate future. So in case if it manages to cross that barrier and move toward, let's say 35, 37, consider liquidating your position.
Okay, all right. So that's it coming in on Ola Electric. We've got our next caller. Sujal is calling us from Bengaluru. Sujal, hi. A very good morning to you. What's your query about?
Yeah, very good morning to you. Thanks for taking the call. I have an investment of 5 lakhs. So I just wanted to know, is it the right time to enter? And then if it is right time, and then what could be my best strategy to investment?
And what is the time period that you're looking at?
A long time, please.
Okay, all right. Avinash, she's got 5 lakhs to invest in right now. What are the counters that you would suggest?
No, I think better to put your money in large caps, stocks like Mahindra and Mahindra, or for that reason, something like an Ashok Leyland. Auto is definitely a space which we like, and we feel that next 6 to 12 months could be quite promising, considering that GST cuts have come in, interest rates have gone down, rural demand is increasing. So I think in both these spaces, commercial vehicles as well as tractors and UVs, I think these are very large companies where the capital also will be relatively safe and the risk reward will be quite decent.
Okay, all right. So that's if you're coming in with regards to where you can park your money right now. Large caps is the preference that Avinash has. But viewers, time to slip into a very, very short break. We'll be right back answering more queries on the other side. So do stay tuned.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
Welcome back. You're watching Ask Profit here at NDTV Profit. I take up the next question, which is from Nagababu, who's writing us from Andhra Pradesh. He's holding Fed Bank Financial Services at the levels of 136. He's got 136 shares at an average price of 140. He wants to know if he can continue to hold this, and if he wants to add, what are the levels that he should add this counter at? Ajit, your view?
So Federal Bank Financial Services, we are seeing that the stock has been consolidating in a range. Tone looks positive overall. Even at current levels, we feel that the upside is going to be gradual. So means in the range of 130-35, that could be the probable range with stop at 120 and positional target of 155 to 160.
Got that view, Ajit. But the next question that's coming in is actually on UPL. It's actually another stock with IDFC that's down and out in trade today. We saw post on Friday, post the market session ended, the restructuring announced, and stocks down almost 13%. Avinash, firstly, how do you view this counter? And actually, our viewer is holding shares at 480. Should he book out, continue to hold? What would you recommend?
No, I think currently, the market is little confused and little upset on the valuation norm, and basically valuation details have not been disclosed. So, that is the reason the market is little uncertain. My guess is that some more clarity needs to come out for this demerger. I think the seed business is going to be demerged into a separate company, and obviously, the existing shareholders of UPL would benefit. But I think because the valuation and the clarity has not come in, the market is giving it a thumbs down. My sense is at these levels, it's not advisable to sell in panic. I think wait for the markets to settle down. I think you would definitely get some management clarification on this aspect. And I think over the next 6 to 12 months, hopefully this demerger move will be beneficial. So I think, if the investor wants to exit out of his existing position, he can get out. But if he wants to have a slightly longer term call over the next 12-15 months, he should hold on.
Okay, all right. So that's the view coming on UPL. Probably the stock is down because of the reason that despite of the restructuring, there is no clear picture right now with regards to the debt position of the company. But moving on, the next question is from Ekambar. I was asking about Godrej Properties. He's got 50 odd shares at the levels of 1786. He wants to know if he can hold or exit and understand as to what should be the next course of action for him. Avinash, I'll stick with you for this one. He's also asking that if he exits this counter, should he invest into Maruti? Is that the right thing to do?
No, I think my guess is, he could exit, but typically, I think, my sense is that we would still be more positive on companies like Ashok Leyland, Mahindra and Mahindra, and maybe in the data center theme, something like Anant Raj, where possibly the traction is going to be quite significant over the next 12 to 18 months. So I think, these could be choices where you could take a call.
Got that view, Avinash. But the next question that's coming in now, it's on Tata Steel. A short-term view, Ajit, is what our viewer is actually asking. Soma Sekhar from Bengaluru, holding Tata Steel at 181. So currently in a decent profit. Should he continue to hold?
So in fact, Puneet, the metal as a pack is still witnessing rotational buying. Some of the names like Tata Steel, JSW Steel, Jindal Steel. So definitely it should stay put. Now the trading stop should be at 200, where we have seen a decent pace formation. In the next leg, let's say above 212, the stock can gradually inch toward 220, 225 levels. So if the view is short term around that area, he can consider booking some partial profits.
All right, so that's the view coming in on Tata Steel. The next question is from Raghu. He's currently holding a long position in BEL with an average price of 263. He says that given the current market valuation, the stock's recent performance, he's evaluating his exit strategy. Should I consider booking partial profits at this stage? What is the fundamental justification for this particular counter? Okay, so Avinash, I'll take this up with you. Would you recommend him to book his partial profits, or would you recommend him to continue to hold the counter?
No, I think he can book out part profits here because he's made a decent upside. But I think the rest of the quantity he should hold on, because see, this is one company where our sense is that Safran, who's one of the French companies, has done a JV with the company. So the benefit of this deal plus the existing order book is going to give a lot of traction for the company over the next 2 years. So I think defense business is growing very rapidly. They have a very healthy balance sheet. So 50% one could book out, and the rest one could take a time frame of 12-18 months. Obviously, the risk reward going forward will be much better.
Got your view, Avinash. But the next question that's coming in from Pune, and Dhyanesh is having a stock query for us. Welcome to the show. What's your query?
Yeah, my query is I have 200 shares of Bharat Dynamics bought at 1526.
And do you want to hold it for the long term?
Yeah, actually I have bought it for long term, but since last 6 months, I think the share has dropped. So I wanted your suggestion.
Got it. Avinash, is it a good time to continue holding Bharat Dynamics? Is it also a good time to average down? What would you recommend?
Well, I think, if the investor has a 2-year kind of time frame, the runway definitely looks good. They have a healthy order book, and, in case of surface to air missiles, BDL is a very prominent supplier. In fact, they have been exporting their products to quite a few countries. And typically, Q3 was a soft quarter, but Q4 is expected to be a strong quarter with better execution. So I think, you can even average, but keep a time frame of at least 18 to 24 months, because at these levels, the stock appears to be fair to expensive. So the market should obviously reward the company with a better earnings multiple, on FY27 numbers.
Okay, the next question that we have is from Yash, is asking about Senco Gold. Is bought at the levels of 365 rupees and 100 shares is what he's holding. He wants to know if he can hold or sell. Ajit, your view on the charts for Senco Gold?
So Mahima, extreme volatility is what the stock has been experiencing for almost 4-5 months. 250, 360, broadly that's the range. Currently we are in the middle of the band while holding below the long-term averages. So possibly an attempt on recovery toward, let's say, 40, 45 is still possible. But a sustained move seems difficult considering we have multiple resistances around 355, 360 area. So use any recovery to reduce your position. In the interim, maintain a stop at 310.
Got that view, Ajit. But next question is on SKF India. Srikanth from Bengaluru is asking if it's a good time to enter this counter. Avinash, I think he's not mentioned which one, because I think there are 2 entities now, but what would you recommend?
I think the auto bearing player, I think should benefit, because clearly with the commercial vehicle, with the two-wheeler and the passenger car segment doing well, SKF is a very large vendor in the ball bearing space. And typically, I think after the demerger, the return on capital employed, the earnings growth is expected to do well. So I think, if the investor can wait for the next 12 to 15 months, he could definitely start buying slowly. I mean, maybe he might deploy 25% now and wait for the next quarter results. But typically, it's a calendar year company. So obviously, the January to March numbers should be reasonably good, coinciding with the kind of growth auto sector normally shows in the Jan to March quarter.
Okay, all right. So that's if you're coming on SKF India. The next question is from K. Parthasarthi, who's writing us from Chennai, asking about Lemon Tree. He's got 100 odd shares at the levels of 148. He wants to know if he can continue to hold, add, sell from a long-term perspective. Avinash, your view, because considering that they've continuously added rooms in the last couple of quarters, that's now started to play out in terms of where the operation metrics also stand. So what's the view like?
So longer term, I think Lemon Tree will do well because they have targeted the middle and the affordable segment, and that's the largest part of the hospitality market. But I think they have also announced some restructuring, Mahima. I think that also will get reflected in FY27. So I think the balance sheet will also get a lot leaner. The ROC will improve. The earnings will also improve. So I think to that extent, the investor should wait for the fourth quarter numbers. And I think here you need to invest for a slightly longer period, 12 to 18 months. Only then I think you could get a decent risk reward, from the investors who have purchased it at around 130, 140 levels.
Got that view, Avinash. But the next question also, and it's a difficult one. But Anish from Kolkata actually has this question: holding Prince Pipe at 615. Now he's holding it since the last 4 years. Stock's been an underperformer in that space as a whole. But what would you recommend? Ajit, in that sense, because he's sitting on a loss of almost 2.8 lakh rupees. Does it give any indication of coming back to some of those elevated levels of where he would have bought it? What would you recommend Anish to do?
So Puneet, yes, it's underperforming, and in fact, the recent attempt of recovery also failed out, at multiple occasions. The only silver lining is that the last time the area closed around 230-35 from where it has rebounded. Same after this recent retest, we are seeing bit of a breather and consolidation. So probably we may see a rebound attempt again towards, let's say, 280 290 zone. And in case if it manages to surpass this level, then probably 340 350 is also possible in this rebound. So in my opinion, until we break this support zone, we should definitely continue to stay put. So 230 should now be his stop loss for this position, and above 290 he can trail his stop loss to 250 and wait for 340 350 and reevaluate his position again.
Okay, all right. So that's you coming on Prince Pipes. But Avinash as well as Ajit, it's time for a rapid fire round. Try to keep your answers as short as possible. The first question is from Soumya, who's writing us from Bengaluru, asking about Ashoka Buildcon. Is this the right time to buy, Ajit?
Avoid.
Aegis Vopak, Avinash, bought by Harjit at 228. Stocks up 9% today. What would you recommend?
Yeah, I think continue to hold.
Okay, 2,000 shares of NCC bought at the levels of 150. Can I continue to hold or sell? Ram is asking from Hyderabad. Ajit, your view?
Hold with stop at 140.
The next question is coming from Mohan. He's holding Jubilant Foodworks at 555. Avinash, what would you recommend?
Yeah, continue to hold.
Okay, Moschip is the next one. Prabhakar wants to know if this is a good time to make an entry into this counter. Ajit, your view?
Maintain strict stop at 188 for 225 to 30 as position targets.
Sandhar Tech, Ajit bought at 565, holding 120 shares as Prasanna. Should he continue to do so?
Hold.
Okay, Dixon Tech is the next one. Kajal from Maharashtra is holding 6 shares at the levels of 18,290. She's sitting on a loss of 45,000 rupees. Can she continue to hold from a long-term perspective, Avinash?
Yeah, continue to hold.
Is it a good time to enter Hindalco, Avinash?
Yeah, I think from a longer-term perspective, yes.
Okay, the next one is on Force Motors. Bhanu from Hyderabad wants to know if he can enter right now from a short-term perspective. Ajit?
Maintain stop at 22,000 for 27,000, 28,000 as the position targets.
Novartis India, V. Nagaraja is actually bought at 635, Avinash. He's asking if he should continue to hold or book some profits now that post the announcement of the stake sale.
No, I think he should hold on. I think probably he could get a better price to exit.
Okay, Vikrant Engineering is the next one. Seemant from Bhopal is asking if he can continue to hold this for the next 6 months. Ajit, your view?
Better to exit.
The next one is on Thomas Cook, bought at 183 by Gautam, who's a regular viewer. Ajit, what should he do for the next few months?
Use recovery to reduce. In the interim, maintain stop at 100.
Okay, 50 shares of M&M bought at the levels of 3470. Can I add more or sell? I know Avinash's view, but Ajit, your view on the charts?
Yeah, you can add more.
Bank of Maharashtra at 56, held by Tejas. Avinash, what should he do?
I think he should continue to hold.
Okay, the next one is on Paradeep Phosphates. Is there a reversal that we can expect from here for the next 1 month? Ulus is asking this question. Ajit, your view on the charts?
Extreme oversold, rebound likely, but upside seems capped. So maintain stop at 110 and 132, 135, review the position.
Nitin has actually bought Union Bank shares at 165, but Avinash, he's holding 46,000 shares. Should he continue to do so, book some profits now?
Yeah, I think some profit booking advisable, rest he can hold on.
Well, got that view, Avinash as well as Ajit. Thanks so much for joining in and helping us solve all those stock related queries. That's the end of the rapid fire as well as this edition of Fast Profit. And we've been able to solve 55 queries. So thanks so much to both of you. If we have missed your query, we will start taking all of them at 2 p.m. in our Ask Profit, the afternoon edition. To do, stay tuned for that. But thanks so much for joining in. A lot more action on the other side.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. I've got a very interesting company. It's been buzzing in trade also, but I won't give you the name before that. I'll give you some hints. Try to guess it. It'll be easier for you. The company manufactures heat exchange and HVACs. It's an interesting full form. I'll give you that option, but this is a hint. The second hint is
It's based out of Neemrana, Rajasthan. It's coming from RICO. It's like an SEZ with a lot of benefits. Also, the stock, it has been listed in 2024 and it's up 313% when it comes to the IPO price. That means it's been a multi-bag up. So now you must be understanding what this company is all about, and largely in this sector itself, if I talk about it, there's only one proper play. Of course, there are some larger MNCs also who are having some kind of a product portfolio, but specific is KRN Heat Exchangers. This is the company I'm talking about. Everybody is talking about it. But why are we calling this company right now? Earnings season is over, data center theme is also playing out, stock is also buzzing in trade. So let's list down the key reasons why KRN Heat Exchanger is important. The growth plans for 2027. This becomes very much important. Anything you see, any cooling solution you see, there needs a lot of structures behind it, and that is where this company comes in. What will be the margin outlook of fourth quarter, and will there be more inventory gains? We already saw that in Q3, and that's why the EBITDA margins were up. That is one question to be asked, and of course this is the second question. Both of them are correlated. And also, apart from these numbers, we will be asking about the new bus AC segment. They have acquired an interesting name, so we will be asking the management what's the outlook going ahead, what's the incremental benefit coming like. And if you look at it, the international expansion plans, global heat is also there, global warming is there. It's less than 20% of exports, but nevertheless, Middle East and US, that's where we'll be focusing. And on the show, we'll have Santosh Kumar Yadav. He's the CMD of KRN Heat Exchangers, and everybody's talking about this stock. So that's something which we'll be watching out for. But let me give you some more details about the company, what everything is all about, and then we'll get our doubts clarified also by Santosh. The first thing is it's based out of Neemrana in Rajasthan, and company designs, manufactures, supplies tube type heat exchangers. This is something which you do not see. It's inside the ACs, inside the compressors. So you might see the cold, but the entire machinery is something which the company makes inside. This is used for heat ventilation, AV and registration industry. So I'm talking about HVAC. So that is where this formula start coming in. Now this company was listed on both the exchanges on 3rd October 2024. Remember, the financial history, the shareholding history will be very limited because it was recently listed, just been 1 year. The company has acquired bus AC division of Spear Refrigeration System. That is where the incremental question starts coming in. Company makes 5 mm to 15.88 mm heat exchanger tubes. These are those smaller tubes which are combined together in different AC and ventilation setups. Now the company is having 2 manufacturing facilities, and both of them are in Rajasthan. And looking at that production, that is around 10 lakh or 1 million units is something which the company is producing. In terms of components, 84% sales are being done domestically as well. That means the remaining 16% is for your exports. HVAC full form means heating, ventilation and air cooling. This is something which you should know. But to whom do they give their business to? To the OEMs also. That's why we call them original equipment manufacturers. These are the small alerts which is very important when you analyze a company like KRN Heat Exchangers. There are key triggers for it which is very much important. Management has reiterated 20 or 50% capacity utilization for the next 2 financial years. This is very much important. You should note that down. The second trigger is the data center order growth. That is where the interest is coming in the markets, and expected that the medium term growth would be very strong. The tariff overhang that has actually gone, and the company might be increasing their penetration strategies, at least for European Union and America also. Remember, Middle East also, they are having a good proportion of revenue coming in the exports. The data centers business, they're capturing 15% of market share over the next 3 to 4 years. And that is why the street is very bullish on this counter, and a very significant up move has come in. I'll give you all those detail in the street trend. But the export revenue breakup, how things are looking like. The real action, of course, Middle East and America, that is where the entire setup is looking like. And this industry itself is growing, and it's a sustainable growing coming in. Also, let's look at the other key numbers also apart from this. The marquee clients are there. Whichever AC you want, major of them, the key components are there from KRN Heat Exchangers. We check Daikin AC, Schneider, all of them doing well. And remember, the entire industry, the Indian HVAC industry, That is a CAGR of 14.5% till 2029. So there is a big industry to be addressed to and to look at. So this is the entire setup coming in for the industry and the company. But to give you more perspective on our show, what we do, there are roughly 8 parameters where we track a company, and let's just get all of them to judge a company in KYC. It includes income statement, balance sheet, cash flow, return ratios. That is also something which we watch out for. Non-numbers, it's the shareholding, street cred, how much money it has been made, has it been a multi-bagger from IPO? All these questions will be answered in this query. Valuation, largely the peers I have not tracked. I've given the actual valuations of what the peak numbers could look like, because we need to be very fair in our analysis. It should be apple to apple comparison and outlook. Industry bhi, company bhi kya karta hai, that is something we would be focusing on. But let's start with the first parameter. That is the income statement. And remember, in our analysis, we track the Q3 numbers also. So largely we see the numbers are going well. The net profit that has gone up to almost 53 odd crore, little bit of pressure in the margins, but that's the FY25 number. The Q3 numbers are on the higher side when it comes to the margins, and that is what we have picked up the numbers for. And that's the growth coming in. Look at that, from 14.2% this has gone to 20.3%. Will this sustain going ahead, or is this just an inventory bump up? That's what we'll ask Santosh and get our clarity. Q4 is something to watch out for, and FY27. So all side the numbers are looking very strong, and that is why it's showing strength coming in. So Q3 numbers have been good. So net, I will be giving this a strong thumbs up when it comes to the income statement. Next one is the balance sheet. Balance sheet is very much important. I checked the interest coverage ratio. They are increasing. That's actually showing a good strength. The debt equity ratio, that is also down. That's why you're seeing the borrowing from 60 odd crores. It has come down to 33 odd crores. That means there's been a good balance sheet management, especially after using the IPO proceeds as well. And net, the cash bank balance is also there. Despite an acquisition announcement, the company is still having a sizable 151 crore cash balance also. This actually helps the liquidity ratios going ahead. So for the balance sheet also, I will be giving this a strong thumbs up. We spoke about income statement, we spoke about balance sheet. Let's talk about the cash flow segment, how things are moving. And if you'd like to point out, it's very much important to understand, how much type of, operating cash flows are coming in and going out as self. This is a very limited history. So to be honest, we need to be fair in our analysis. The PAT number has gone up. The cash flow to PAT conversion is also good. And because of these two ratios, I feel the cash flow would be better coming in for KRN heat exchangers. And it's a thumbs up when it comes to the cash flow segment as well. A little bit of concern starts coming in, and that's the return ratio, the ROE numbers and the ROC numbers. That is something we need clarity from Santosh, is how do we judge this company? There was a big up move. Remember, at that time it was not listed, and this was a standalone number. The consolidated numbers coming from FY24 and FY25, but still from 30 odd percent it has gone down to 11%. Just show the ROC numbers and ROE also. You'll understand the change which is happening. Is this business specific? Is this industry specific, or is this account specific? All of these details will be asked to Santosh. So it's a negative, I would say, when it comes to the return ratios. The market also needs to understand why this is happening. Also, let's talk about the other ratios, and that's the shareholding pattern. And look at the shareholding pattern. The promoter holding has been decent, but the jump, the interest which has come in post the listing, from 1% this has gone up to 5%, from 6% it has gone up to almost 7 odd percent. So DIs have increased, FIs have increased. So there it seems like a very positive momentum is coming to the stock, and right now also we saw is that a good momentum is coming. So this is a shareholding pattern. It's a strong thumbs up when it comes to the overall numbers. Let's also talk about the street cred, how much returns have come in for the investors, be it short term, be it long term. That is what we'll be looking at. And if you could just show how the numbers have come up from January 26 lows onward. This is just 1 month. The stock is up 55%. It's been a vertical up move coming in, almost a parabolical move coming in. Of course, 1 year basis, stock is decent, up 10%. There was a period when the stock was flat, but if you have got the allotment in IPO, congratulations to you. If you're holding it, stock has given you 313% return, and this IPO just came in at the end of 2024. It's a matter of just 12 to 15 months. The stock has been a multi-bagger. Of course, the listing was also very strong, so do remember that. But nevertheless, the stock has done really well for medium term, short term, and the IPO investors. So I will be giving this a strong thumbs up when it comes to the street cred. Let's talk about the valuations, how they actually pan out, and we have taken the 12-month forward P valuations. There was an euphoria in this counter. This was almost 56 times its P, but after that it has corrected. But remember the up move which has happened recently, still the stock is cheaper, almost 42 times. But let's just give it a break. Why? Stock has run up also, and if you're reading this right now, if you're seeing this show right now, it's at 42 times right now. So there has been an uptake from almost 30 times to 42 times in a matter of a month. So you need to exercise that caution as well. Is it more cheaper compared to its peak level? Yes. Compared to current levels, there might be a second thought. So it's a neutral rating when it comes to the valuations. But valuations ke baad, there's one more important parameter to check, and that's the outlook. That's for, of course, the industry and the company. Most importantly, let's look at the data, how things actually panning out, and this is the number which I'm repeatedly saying is 14.5% up move is coming for the domestic market, and this is a very big theme in the making. The second important thing is this demand which is happening in both residential and retail consumer segment, and as things get quantified, more benefit starts coming in for a company like this. They are diversifying their customer base and increasing their market share as well. We'll ask the management what's the market share actually they are enjoying and how much it can go up. The growth is coming in data center, commercial space, and industrial cooling, and as industrialization picks up in India, the company becomes a beneficiary. There's a new manufacturing facility also which will be inaugurated on March 11. So we'll be asking the management about all these key details. But as of now, outlook, it's a strong thumbs up as well for both company and industry. But let's revise all the ratings, how things are actually panning out, and the income statement, balance sheet, cash flow, all of them have been decent. But return ratios, that's very suppressed coming in. That remains a concern for my analysis. Shareholding, street cred doing really well, but valuations, they have run up in the last 1 month. So you should take things with a pinch of salt. Outlook remains strong, especially because of the industry number which I looked at, and that's good. So overall, the KYC rating on the higher side comes in at 6.5 out of 8 we give for KRN Heat Exchangers. But joining us would be Santosh Kumar Yadav. He's the chairman and managing director of KRN Heat Exchangers with 19 years experience in this industry, and interestingly, he's the ex-head of operations and Lloyd Electric and Engineering. So joining us is Mr. Santosh. Good afternoon to you, Mr. Santosh. It's always a pleasure to talk with you. But the company of the moment, KRN Heat Exchangers, we just like to understand, what are the key growth levers like for the company going ahead? We already spoke earlier on data centers, but what it means now going ahead?
Yeah, good afternoon, Sarath. So I think recently, honestly, we always don't know why our share was down and why is going up. So however, now I think India market is, hoping for data center especially. So last, I think week have our AI summit in New Delhi and of course in Bombay. So many players, they announced good investment in data center in India. And we are the one of the beneficiary for data centers. So that's why I think investor is keen to in our shares and is doing good since last week. So as I said in before our multiple calls, we are the key component manufacturer for especially data center cooling. So we hope whatever order will enjoy India market. So based on our capacity, capability, and our legacy in particular in data center, we will be able to, achieve at least 50% of the total requirement for India market for heat exchanger. And of course, we are supplying to maximum to complete HVAC manufacturer for data center. And whatever, one or two still we are not supplying, we are connect with them already, and we have RFQ from them. So hoping in next one or couple of months, we will start to them as well.
Okay, Santosh ji, a little bit of our audience needs to understand your product profile, what it is. It's generally something which is behind an AC or behind, you could say, cooling solutions. It's all around us, but we can't see it. Is it right?
I know if outer side, I think you can unable to see, but back side, if you see like especially room air conditioning, so condenser can be visible like behind the small visibility is there. But however, like in air cooled chiller, you can able to see from outside as well. But it's quite technical, so that's why you can say you are not able to see. But of course, it's the key part of the HVAC system. So we always say we make like HVAC and our industries are heating, ventilation, air conditioning, and refrigeration. So whatever complete HVAC system in their industry, so we supply our components. So there is the two component, like one is the heating side and one cooling side. So you always say condenser and evaporator. But now it's a heating pump as well, so it can reverse based on season. So we supply mainly in our commercial industry. Our market share is almost zero from room air conditioning. So what you said, like growth is room air conditioning or maybe 14 to or maybe 15%, but in commercial is much more, around 25%, especially you can see bus air conditioning, and then of course metro, train, and cold storage is quite good now since last year. They are doing good, especially dark store, whatever they are like is.
And Santoshji, talking about the margins, this Q3 number, the margins was 20.3%, and there was, of course, an inventory bump up also. Just want to understand what will be the sustainable margins going ahead on a consolidated or a blended basis for Q4 or FY27. Any range is also fine.
So I hope our maybe tough time for margins is still now only, or maybe maximum this quarter only, because our new facility already started, and now we are ramping up from our new facility. So our overhead or maybe labor cost already increased from new facility. So next year we will be able to sustain our existing margin, and we will able to increase some percentage. Because in next year we are going to receive PLI, which we have already, but this year we are going to receive, but next year we are going to receive for sure. Then we are going to receive our RIPS incentive as well from next year. So, and our labor cost or maybe overhead can be reduced based on our top line once increase. So I think we can enough sustain, and also I'm hoping we can able to increase in some percentage.
There is two elements at play, right? One is the backward integration, and the plants being in RICO, there are some benefits also which come in. So the margins going ahead?
Yes, backward integration, you can see we did, especially in manifold like our tubing section, and of course in sheet metal. So earlier some parts we are buying from outside, but now we are not buying. So that will also help to increase. And also, especially some products, what we added is really have much margins compared to our existing, especially in bar and plate heat exchanger. Secondly, is complete bus air conditioning. So these two main like component or complete HVAC system will able to also slightly up to our existing margin.
Right. And Santoshji, your outlook for the new bus AC segment. Now, this is a new area which your company is going. Just give us the details about this, and by when can the incremental benefit starts coming in for this new segment of the bus AC?
So if you see complete bus air conditioning as on today, as per my personal opinion, is 1,000 crore market size for especially in India, and almost three company have a complete 90 to 95% market share. And as Indian company, one they have I think 60 to 70% market share. So if I compare in all three big players, we are the on top in terms of backward integration. And which company we bought, they have legacy I think more than 15 years in that particular field. But they are unable to do goods because of finance issue. So now we already have ramping up already like this quarter, including this quarter, we are going to achieve around I think 500 bus complete air conditioning for this quarter, and then next year we able to target at least we can able to achieve 15% of market share in next year for complete India market. For that, we already had almost 15 people in sales, and the main key criteria to market share of bus air conditioning, especially service center. So that we know, and my team already know. So we'll already open 5 service center in India, and each month we are going to open. So fully 25 or 30 like service center pan India we are going to open within next year. So that is the key criteria to get the market share for bus air conditioning, complete bus air conditioning.
And Santoshji, talking about the international business, it's roughly 16% of your revenue, that's much I know. But there seems to be a good demand in Middle East and US also. Just wanted to ask your views now, since a lot of trade deals are coming in India's favor, what would be your strategy in the international expansion? Which countries the inquiries have picked up?
So earlier, what we are exporting to our existing customer, so you can see we are able to increase numbers in export, but maximum revenue we are receiving is still on our existing customer. You can say from old customer only. But from old facility, we are not able to cater their new customer requirement or some you can say good numbers. But based on that, actually, we built our new facility, which is now operationals, and we added some new geometry to key in mind to like requirement from especially North America and Europe. So from both sides now, I think tariff deal also is done. That is good for us. So we have already one president as on roll like as a sales for export. So he is still in the USA and. Multiple inquiry we have, multiple RFQ we have. So we already supplied some of samples, some now we are going to supply. So this year we are able to at least like next financial year, where I think we are hoping to we can able to at least 60 to 70% on existing revenue only from export. Like we will jump.
And Santoshji, what about the capacity utilization levels? What are the expecting at least for FY27? For your businesses, what are the targets?
So next year we are like planning to utilize around 50% capacity from our new facility only, and after that we are planning to at least 80%. So on the same we are doing anything since last week. I think not last week, last quarter we added almost 40 plus new customer, including our existing as well as new products, especially from bar and plate, bus air conditioning and refrigerator components. So things are going from right direction and we are hoping we will be able to achieve 50% from.
Right. And Santoshji, the thing is there's a lot of volatility in the metal prices. Let it be copper, aluminium. A lot of them are a key raw material for you. How do you hedge your risks in this? And if any kind of adverse movements happens, what you do? Just as clarity on that.
So I think still you can see price volatility is quite much in last quarter, but we have almost with all customer contract like that ki last quarter average we will apply for next quarter billing. So quarter to quarter basis, sometime you can say ki some percentage or like slightly we can hit, but we have always inventory 2.5 months and almost 20 days or 1 month under transit material. So I think directly we not affect from volatility. However, we can pass to our customer easily quarter on quarter basis. So if you compare like around yearly basis is no effect on us, but quarter to quarter basis sometime you can say slightly hit or some slightly gain.
Exactly. So quarter to quarter, if you see, there might be some kind of volatility coming in and there'll be some pass-throughs as well. But Santoshji, to put in perspective, apart from data centers, there is of course the industrialization taking place and larger cities or setups are being made in the commercial space as well. How are the demand trends or the client confidence looking like in these sectors, which are the new sectors except data center? We have talked extensively on that. What are the key new emerging sectors where you are getting more business?
So we have tracked like that. We are still, I think, our top 80% revenue from top 10 customer only. But we have now on board almost 250 customer. So we have order or maybe forecast or from all sectors, and that's why we added this new big facility. I think all sector is growing except for us is I think we are not working in room air conditioning, so we are not enjoying room air conditioning growth. But the other sector, of course, we have multiple customer, multiple applications, and that's why we are saying we are going to achieve 50% capitalization from new facility. So for us, bus air conditioning also we are seeing good, and of course this bar and plate we are seeing. So last week only we got approved for our field trial as well from BLW. So now we can enter in as a tendering based 20% business.
Right. So that's the view coming in. All right. Thanks a lot, Santosh sir, for giving your time and giving the entire picture of KRN heat exchangers and what it lies for the industry. It's always good to talk with you. Always a pleasure. Thank you very much, sir, joining in. Thank you.
Thank you.
So that's the management of KRN heat exchangers. The stock has jumped up more than 55% in the last 1 month, and we clarified a lot of queries which have been put up by our KYC viewers. That's all, folks, for today. Stay tuned to NDTV Profit.
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Dalal Street starts the week on decent footing but gives up the early morning gains. Nifty hovers above 25,600 levels. Sensex jumps more than 300 points. PSU banks lead the gains and autos were in top gear. IT on the flip side still continues to drag. IDFC First Bank and AU Small Finance Bank tank in trade. This after the Haryana state government de-impanels all the bank accounts held in both banks across the state. The move comes after IDFC First Bank disclosed a 590 crore rupees fraud by its employees and others in accounts held by the Haryana government. UPL tanks after it announces plans for restructuring. Will carve out its global crop protection units and merge them into a new listed entity. Concerns of debt burden ails the stock. The tariff tangle continues to baffle global community, with President Donald Trump now slapping 15% tariffs after the US Supreme Court struck down his earlier policies. Global economists and legal community, however, argue over the legitimacy of these new levies. Two main board IPOs open for subscription. Renewable energy provider CleanMax to raise over 3,000 crore rupees. Cotton yarn manufacturer Shriram Twistex will raise little over 100 crores. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take a look at where the markets are at noon today. So Nifty 50 clearly in a tight range but did open with a gap up opening after what all transpired on the US tariff as well as the Supreme Court judgment and then the reaction coming in from US President Donald Trump. So it opened with a gap up opening. 150 points is what it has in a tight range that it has traded in. But right now it is losing steam and inching closer to the low point of the trading session. So keep an eye out on Nifty 50, of course, holding the 25,650 mark at the current moment. Take a look at Bank Nifty. That is showing quite an underperformance to the key index of Nifty, and that is flat to negative in trade. But take a look at some of the factors which are really impacting Bank Nifty. Otherwise, it would have been an outperformer in trade today. IDFC as well as AU Small Finance Bank. These are the biggest drags because of the Haryana government de-empanelment as well as the fraud case coming out. And those are the two counters solely dragging Bank Nifty down and showing that particular underperformance. IndusInd Bank also is the only other counter in the red amongst the Bank Nifty constitution in the stack of Bank Nifty. So that is the contribution chart for Bank Nifty. Barring these three companies and especially IDFC and AU Small Finance Bank taking a very deep cut, Bank Nifty would have been an outperformer in trade. And also remember, lessening the gap between PSU Bank Index as well as Bank Nifty gap, because remember PSU Bank Index is the top performer in trade today, and there has been a lot of talk between how private Nifty banks are not the ones which are performing as well as the PSU banks. That gap would have narrowed not if it was not for the two companies on the news developments really dragging in trade. Let's take a look at contribution on Nifty. HDFC Bank with 40 points being added. HDFC Bank had a weakish trade in the last week and has come back with a lot of strength today. So Axis, Kotak, HDFC Bank, State Bank of India are the top contributors, and the biggest drags on Nifty 50 remain to be the IT space, especially Infosys, and metals counters are not doing that well, and consumption along with Asian Paints, ITC and some of the others, Eternal, are a drag. So IT index could be one of the sore points for the market, and not just in the key indices and the big ones, but even in the mid-cap space. It is the mid-cap universe of IT mid-cap index, which is also on a drag, along with two other counters, UPL as well as Godfrey Phillips. These two are really dragging the overall mid-cap index down as well, and a huge underperformance shown when it comes to mid-cap index today to the key indices of Nifty 50. So keep an eye out on the markets, and these are the momentums really playing out. But let's focus on one particular counter. We are talking about Vikram Solar, which has announced a series of updates coming in alongside its Q3 performance. Margins, remember, for this particular company have softened on account of a change in product mix. And we are now joined by the management. Gyanesh Chaudhary, who's the CMD at Vikram Solar, now joins in today. Vikram Solar stock is 2% down in trade. Gyanesh, always a pleasure to welcome you on NDTV Profit. A lot of developments and a lot of aspects to really watch out for. But first, to the question of the stakeholders. The stock is soft in trade. Of course, your 6 months lock-in period after your IPO has just been lifted, and therefore probably it's the selling pressure coming in from your long-term investors who are logged in. So for the new investors, what would be your pitch point for this stock to really show growth and return from here on, and for them to really stay invested in your company?
Thank you so much for having me. I think as a renewable sector, what I can tell you is that the fundamentals are so strong. They're beyond what we have anticipated, what's coming up in the future. We recently saw the AI summit happen, and where is AI energy going to come from? It's going to come from renewable sources itself. So whatever the slated outlay for renewable deployment is, we are expecting that to increase multifold, considering all of these developments are happening. So the sector is strong. Vikram Solar is strong. We are performing well. in the entire journey post IPO, pre IPO also. I think and March is going to be quite reinforcing all of these claims for us.
Right. So, Gyanesh, we haven't spoken to you after the recent development of 2,000 crores pact that you did with Jupiter International, also ascertaining and also assuring the kind of assured list, approved list of modules and manufacturers, and those solar cells have been really now got in the pact. Now, with this particular agreement and assuring the supply chain constraints do not impact you, how is the performance going to get impacted? And you also have a series of expansion projects. How is this going to really fit in and impact a smoother sale?
The government of India has very nicely created a longish target for manufacturers like us who are looking at a long-term stable play. And that allows for us to kind of dig deep into our overall capex outlay and growth plans. While the market is consistently growing, last year India deployed 25-27 gigawatt. This year the run rate is touching about 40 plus 42. So there is a significant improvement in how deployment is being looked at. While this is happening, manufacturers also see the approved list of manufacturers coming into play from June this year, which allows for domestic cell to be the main source of deployment for solar panels. This for us is going to be a slow and steady ramp up, whereas we see that the demand for domestic content is increasing, but the real swing will happen in the next fiscal, where we in the fiscal 27-28, where we see that all the large IPPs will be bidding and winning large projects. In the meantime, to address the domestic content market, we have signed up with an offtake agreement with Jupiter, and that will help us ride through this current year where we need limited domestic content cell supply. Our plant is well on track and slated to come upstream by Q3 fiscal this year, and that will help us to commission, ramp up, and successfully give out domestic content cell as well as module of the highest rated capacity and output. So this is a part of the long-term strategy.
All right. So, Gyanesh, in the paucity of time, my one question with some pointed answers, if you can give guidance before you leave. First, of course, your EBITDA margin has seen softness because of the change in the mix. Second, most analysts are gung-ho about your expansion plans, but all the timelines in execution have to really match. And the third, because of this huge hyper capex plan, the debt levels and your plan on the debt and the leverage situation. So these 3 points, if you can clarify, please.
So firstly, our balance sheet is the strongest it has ever been. We are almost debt-free. We recently, de-pledged all the promoter shareholding, which also sends a very strong message to our lenders and others who have cooperated and supported us. So currently, Vikram Solar has no promoter pledge, which is very important for us also to send a message out for balance sheet strength. As far as the softening of profitability is concerned, what the market is going through a process of capacity deployment as well as large capacities coming into the market. While Vikram's brand speaks for itself, we have been in this market for last 2 decades, which talks about stability, growth, as well as technical competency. This is this phenomenon of change in mild change in profitability dynamics is a part and parcel of the market. Demand supply changes happen. We see an external situation which is quite different from the last year and the year before. So there are a lot of changes, and this is part of the industry that we're in.
All right, Gyanesh, always a pleasure speaking to you. Thank you so much for joining us on NDTV Profit. And of course, that was the picture given on the margin expansion as well as how the stock has reacted to the anchor lock-in really being lifted. So that is under pressure. Things should stabilize by March is what the management says. Now to the top story that we have been tracking in the entire market has been watching out for is the recent developments over the weekend on the US tariff situation. Let me call on the show Dinesh Kanabar, who is the CEO of Dhruva Advisors, an important tax expert, to put more clarity on this particular understanding. Dinesh Kanabar, always a pleasure to welcome you on NDTV Profit. My first question, where does India stand and what is your advice to the companies, to the corporates who are exporting to the US in this uncertain time?
Well, where does India stand is a very important question because for past several months, Nisha, we have seen a significant amount of uncertainty, a 50% tariff, the Supreme Court striking it down by a 6-3 majority, then a 10% tariff under Section 122 of the Trade Act of 1974, then the 10% going to 15%. In the meantime, India doing a deal with 18% reciprocal tariff and giving in certain concessions. So what we have seen over the last maybe 3 weeks has virtually been an avalanche of news and all going sort of seesaw way. But where we stand today is that we negotiated a deal. The deal was 18% reciprocal tariff with number of concessions given by us, $50 billion of trade, non-taking Russian oil, all of that. And that 18%, of course, for starters goes down to 15%. Then we have put on with there was no reciprocal tariff. So what happens to that is something which we need to think through. Then the question is that we have a trade deal and the trade deal is still open because we have only signed a framework. And the question is that how does India's position improve? And it does improve significantly. It has an elbow room today as it is negotiating the deal. So what we saw this morning, which I think was very, very sensible on the part of the government, is to step back and say that while our team is in Washington to negotiate and close out on the trade deal, we just want to step back. We want to study the legal implications of the Supreme Court judgment and then come back to say, because we now have a lot more elbow room, a lot more breathing space on what we need to negotiate. We need to understand that. We need to understand, of course, about refunds and all of that, which you can come to a little bit later. But net today, we have a 15% tariff. That 15% tariff, while it is across the board except for pharma, electronics and the like, question is there are other items which are exempted from reciprocal tariff, which will be there unless we are able to do a trade deal. So a trade deal is inevitable for India, but we are in a much better negotiating space today than what we were a week ago.
Right. So, Mr. Kanabar, you're saying that for pharma, there is right now no reciprocal tariff, and all those sectors which were exempt under the trade deal, they come back on the reciprocal tariff landscape.
Yes, that's right. So, two things happen. In fact, a number of things happen. First is that goods have been exported during this meantime. Overall, there are collections of close to $160 billion by way of tariff. It is estimated by Penn Wharton study that the amount of refund which the US government will have to give will be close to $175 billion. And as you heard President Trump say, that he's in no hurry to grant this refund, that will be a separate legal battle. Already cases have started to be sort of worked upon and will be filed for the next couple of days.
Mr. Kanabar, I'll have to intervene. SEBI chairperson Tuhin Kanta Pandey is speaking.
या तो हुआ है या उसकी कमिटमेंट हुई है, लगभग 1 लाख करोड़ रुपया का फॉरेन कैपिटल ही इसमें आया। तो ये इस बात को दर्शाता है कि हमारा जो बैंकिंग और एनबीएफसी का जो क्षेत्र है, जो पिछले 10 वर्षों में जो कार्य किया गया बैंकिंग क्षेत्र के द्वारा, आरबीआई के द्वारा, गवर्नमेंट के द्वारा, विशेषकर कि पब्लिक सेक्टर बैंक्स में जो गवर्नमेंट के द्वारा जो कार्य किया गया, उससे न केवल कैपिटल एडिक्वेसी इंप्रूव हुई, लिक्विडिटी जो है बेहतर हुई, प्रॉफिटेबिलिटी इंप्रूव हुई, एसेट क्वालिटी NNPA आज के दिन में 0.5% से भी कम है, और साथ ही साथ जो गवर्नेंस इम्प्रूव हुआ, जो पूरा सिस्टम जो इम्प्रूव हुआ है, जो उनके अप्रेजल की कैपेसिटी है, कंप्लायंस की जो कल्चर है, जो कि ये कुछ एक सॉफ्ट चीज़ें हैं, उनमें भी जो पिछले 10 वर्षों में बेहतरी हुई है, तो हम बिल्कुल निश्चित हैं कि आगे आने वाले वर्षों में जो भी भारतीय अर्थव्यवस्था की ज़रूरतें हैं उनको हम पूर्ण कर सकेंगे।
धन्यवाद सर। नेक्स्ट क्वेश्चन फ्रॉम मिस श्रीमी चौधरी फ्रॉम NDTV Profit.
Ma'am, my question is for you. How are you reading the latest US tariff twist emerging in past few days? Any impact on the Indian economy are you seeing?
On the Indian economy, I think it's a bit too soon for me to comment. But on the trade particularly, aside from the Indian economy in general, the Commerce Ministry is reviewing the situation. The delegation will have to take a call on when they're going to go for further negotiations. So it's a bit too early for me to comment.
Thank you, madam. Next question from Deepankar Kumar from PTI.
Good afternoon, ma'am. Good afternoon, sirs. This is with regard to one of the announcement made in budget in 22-23 with regard to CBDC. After that, pilot phase was launched and it's almost 3.5 years. Full-scale launch is still awaited. What are the challenges that RBI is facing, or if you could share the update on nationwide launch of CBDCs?
See, first of all, let me clarify that the CBDC is not for the moment. It's not a kind of a substitute for cash. Neither is it, a substitute for the other payments, fast payment systems or other payment systems. It is there, to augment these payment systems that we have in our, and currency systems that we have in our country. We have done a number of technical improvements in this regard. Right now, the effort is basically to get the technical and the operational details to be done, to perfect them. And in this regard, a number of further innovations and improvements are being done. For example, we are working on making this available even in offline mode. So unless and until we have the whole bouquet of features which are available on this CBDC, it would be premature to implement this on a large scale. However, at the same time, it has, you are aware, a number of additional advanced features which other forms of payments and currency do not have. For example, programmability. Because this is actually a new feature. So this is the feature, that we are again promoting in partnership with the central government and in partnership with state governments, wherever we want to make targeted payments.
All right, so that was the RBI governor talking, and Finance Minister Nirmala Sitharaman, when asked by our correspondent Shrimi about the US trade uncertainty, she said it's too early to comment. So Dinesh Kanabar, Finance Minister, also saying wait and watch, it's too early to comment. And of course, these are uncertain times. But if we just focus on the positives and negatives, of course, from 18%, it has come now down to 15%, and that is temporary for 150 days, and a lot can happen in that particular time. In your assessment, which are the specific sectors like pharma, electronics you mentioned, if you can summarize which sectors stand to gain and what stands to lose, who got unlimited benefit in the US trade deal, which is now overturned for the time being?
So two things. First, Nisha, you mentioned about 150 days ending on 26th July. I think there is, first of all, a challenge as to whether the invocation of Section 122 is itself appropriate. that depends on USA having serious challenges with its balance of payments. And while USA has a trade deficit, there is a deep divide even within the US legal system as to whether you could call it a balance of payment crisis. So nobody has invoked Section 122 in the past, no precedent. And therefore, it is quite likely that this itself could be challenged once again. And how will that stack up? I really do not know. But this is not free from doubt. That's number one. To your specific question, energy products, pharmaceutical, electronics are the three items which cannot be covered under Section 122 and are therefore out. And therefore, other items which were exempt from tariff will now be subjected to 15%.
All right. So that's a great point that you mentioned, Dinesh Kanabar. Thank you so much. We have to get back to RBI Governor speaking there with the Finance Minister.
In making our assessment of the liquidity requirements, looking into the leakage of currency in circulation, which requires more durable liquidity to be provided, but also requirement for reserves as a result of higher deposit and credit growth rate because of forex intervention, which we do not to target any price or level of the foreign exchange of the Indian rupee, but to reduce the volatility. And then more importantly, the government balances, because they also fluctuate, on a day-to-day, week-to-week basis. We will continue to provide preemptively durable liquidity, what is needed for the transmission of the policy rate to all markets, whether it is money markets, the bank markets, government securities, all these markets.
Thank you, madam. Thank you, sir. Next question from Shishir Sinha from Hindu Business Line.
Namaskar, ma'am. Namaskar, sir. Sir, my question to you, Governor, sir. With the change in the base year of CPI and GDP, are you going to revise your estimate? And also, are you also thinking about that inflation targeting range should also be revised because of the change in the CPI base year, sir?
So two questions. You are saying, will we change our CP estimate? Obviously, see, if the whole methodology is changing, then that will undergo a change. So next estimate that we give out will be in our April policy, and so that will certainly take into account whatever changes that have been brought in. We have welcomed those changes, as you are aware. They will help. I think they better reflect the consumption expenditure of the Indian households. They will also, to some extent, reduce volatility. So in both ways, the methodology also has been changed. So even that will also help, in better estimating the CPI inflation. Second question, as to whether the target should be changed or not as a result of that, that is still under examination by the government. We had published a discussion paper. We got comments. We gave our recommendations to the government. So now the government will be examining and very quickly coming out with target. However, I may mention that merely, because of the change in this CPI series, will it result in a change? I don't think so, because even though those changes in terms of direction are very material in terms of methodology, coverage, representativeness, volatility, etc., but they are not high enough. They are not, because the changes are there, but they are not substantial, only because of which there should be a change in the target, only because of this.
Thank you, sir. Next, we'll have Aryan Khanna from Informist.
Thank you. This question is to both Madam Finance Minister and the RBI Governor. A couple of years ago, the Finance Ministry had moved away from switching bonds bilaterally with the RBI, according to public statements by finance secretaries at that time. What has led to a move back to such a measure, especially twice in the current FY, you've made large switches, and do you expect this to continue in the future? Also, is there from the RBI's perspective, is there a liquidity management impact from the switching of the GSEC? Thank you.
See, we have a number of measures in our operational toolkit for the debt management. This is not a tool, let me clarify, this is not a tool for liquidity at all. This is only a debt management tool. And effectively what it does is, the press had reported, that the gross borrowing has actually, increased a lot, which we try to clarify that is not the real thing, to be noting. The more relevant number is the net borrowings. So the net borrowings actually, increased only by about 20,000 crore from, I think if I remember correctly, 1150 to 1170 or something of that order. So this switching operation also basically what it does is it postpones some of the maturities which are going to come in. Next year they will be postponed further depending on the maturity of the switched bond, and the gross borrowing next year will decrease. So it's part of the tool. Now some of them are maturing, some of the RBI holdings were maturing, so that's why we have done with a switch with the RBI holdings, but we also followed it up with a switch with the market. So they are all part of our operating policy toolkit. They do not reflect any change in our operational strategy.
Thank you, sir. Next question from Nikunj Ori from Thomson Reuters.
Just 1 minute here.
He wanted some clarification.
Ma'am, any change in thinking from the finance ministry side because of the public comments 2 years ago?
Not at all.
Okay.
Thank you. Nikunj.
Good afternoon. My question is for the governor. So the market participants have sought government's intervention on review of some of the bank guarantee collateral requirement norms that the RBI came up with. So that seeks to double the cash requirement as a collateral. So will there be a review on that? Thanks.
So we now, we mentioned even in the board, this was also discussed, FSTC. We now have a framework making a framework for making regulations. So before making any regulation, we publish the draft. We invite comments, suggestions, and this has been done, after proper consultation with all the stakeholders. And initially in the draft, I may mention, that this particular proprietary trades, lending for proprietary trades was prohibited in the draft. And after that, after taking into their comments and suggestions, we have not allowed it with certain prudential norms. There is no change that we are contemplating.
Thank you, sir. Next question from Mr. Ajay Mishra from Doordarshan.
सर धन्यवाद। सर पूरी अर्थव्यवस्था में महंगाई लगातार काबू में है। आगे जाते हुए खासतौर पर जो ग्रामीण क्षेत्र हैं और एमएसएमई सेक्टर है उसमें जो हम लोग लोन देने जा रहे हैं उसको लेकर के क्या आपने रिव्यू किया है, क्या वो सफिशिएंट है या उसमें और भी थोड़ा सा बेहतर करने की उम्मीद है? क्योंकि आज ही प्रधानमंत्री ने पत्र लिखा है बैंकिंग सेक्टर में बंगाल के लिए खासतौर पर, लेकिन उसमें और भी इम्प्रूवमेंट का उन्होंने संकेत दिया है। सर थैंक यू।
ग्रामीण क्षेत्र और लघु
और मध्यम उद्योग क्षेत्र हमारे लिए बहुत महत्वपूर्ण है। आज भी बोर्ड में उसके ऊपर में चर्चा हुई। माननीय वित्त मंत्री महोदया ने भी उसके ऊपर में हमारा ध्यान आकर्षित किया और ये हमारे लिए लगातार हमारा एक प्रायोरिटी एरिया रहता है। जैसा कि आपको मालूम है, जो हमारे पास में लेटेस्ट आंकड़े हैं उनके अनुसार 14.5% लगभग 14.5% की वृद्धि दर दर्ज हुई है बैंक ऋणों में और सभी क्षेत्रों में, चाहे वो कृषि हो, चाहे वो बल्कि एसएमई क्षेत्र में तो 25% मेरे ख्याल से 28% के लगभग ग्रोथ दर्ज हुई है। तो अच्छी एक ग्रोथ वहाँ पे दर्ज हुई है आगे, और हमने इसके लिए कई सारे कदम उठाए हैं। बजट में भी आपको मालूम है माननीय वित्त मंत्री ने इसके लिए काफ़ी सारे कई कदम इसमें उठाए हैं और हम भी आगे यूनिफाइड लैंडिंग इंटरफेस की चाहे बात करें, चाहे जो कोलेटरल फ्री लोन्स की लिमिट है 10 लाख से बढ़ा करके 20 लाख रुपए का हमारा प्रस्ताव है, वो अभी पब्लिक कंसल्टेशन में है। तो हमारा आगे भी दोनों क्षेत्रों को, सभी क्षेत्रों को, विशेष कर इन दोनों क्षेत्रों को, ये प्रायोरिटी क्षेत्र में भी आते हैं हमारे, अगर इनमें ऋण बैंक देते हैं तो जो प्रायोरिटी क्षेत्र की जो उनके लिए जो रेगुलेशन हैं, जो रिक्वायरमेंट्स हैं, उनको भी ये मीट करते हैं। धन्यवाद।
धन्यवाद सर। नेक्स्ट क्वेश्चन फ्रॉम सुरभि प्रसाद फ्रॉम बिजनेस टुडे।
Good morning, ma'am. Good morning, sir. My question is to both of you. It's regarding the prices of gold and silver that have been shooting up, and imports of silver has also increased, and the prices have also had an impact on the trade deficit and the new series inflation also. So just wanted your thoughts. Is it a cause of concern as of now, and just your thoughts? Thank you.
See, all gold which comes to the market is imported. In this country, the dependence on precious metals is very much from outside only. In the sense, we get every bit of every ounce of gold which comes into the country is an imported gold, and we don't have our own source of exploring and extracting gold. There are steps being taken, but yet not sufficient to meet our demand. Gold has always been favored investment for households, whether as an asset class or for jewelry. So a high-pitched demand from, let us say, the domestic consumption also sees a seasonal spike during festival season, during Akshaya Tritiya and so on. We are watching it, but I'm not sure it has reached such alarming proportions given the tendency or natural things as it is in India for investing in gold, buying gold, and therefore I think it has not gone in that sense beyond a certain limit. But of course RBI will also be monitoring it. Other than that, other than typically what's happening in the Indian market, it's also important, and I'm sure you from the media would have noticed, that most countries today, particularly their central banks, are buying gold and silver and storing them. It's a tendency when you talk of Indian consumer market, Indian households. Every central bank did have some, but of late you notice that many of the central banks outside are also buying gold. So international price of gold or silver, which used to be because of China and India being large consumers of gold, largely due to domestic purchase of gold, spiking up and down. Now the spike is largely due to central banks also buying and storing. And we as importers, therefore, for our domestic consumption, which is a usual thing which happens every season, every festival, every household purchase, is affected because of the global increase in gold and silver prices, which are much beyond the usual increases and fluctuations which happen in the gold and silver market. So I'm purposely bringing in the element of the central banks outside, domestic consumption within the country, the pattern within the country of gold purchases, and the cause for that unbelievable spike in gold and silver prices, which are largely because of the investments in big numbers by central banks outside the country to store. So my observation is to bring in the central bank is for saying as to why globally it is shooting up.
Let me add that if you look at numbers from April to December, the quantity of gold, I mean, In value terms, there was hardly any increase. I think about $1 billion or so against 40, 50 billion, $50 billion. It increased from 49 to $50 billion. So till December, value terms didn't increase despite increase in prices, because whatever was the increase in prices was offset more or less by the decrease in the volumes of imported gold. It's only in January, we are still analyzing those numbers, that there has been a sudden spurt in value as well as in volume. As the finance minister also mentioned, there is a lot of fluctuation, seasonality in that particular demand. So we are not unduly concerned about that, especially because our external sector continues to be very robust and strong. The current account deficit is still very, very manageable as per our projections. It's within or about the 1% of GDP range. The government has now a number of agreements for trade, international trade, that it has signed, so that will help our current account even further going forward. Even on the capital side, it will help, because trade and investments generally go together. Over and above that, number of policies that government has come out on the FDI side, latest being liberalization, opening up 100%, insurance sector, and then the AI summit, recently that we had. So many, I'm forgetting the numbers, some hundreds of billions of dollars being committed towards data centers. Earlier we saw, the tech giants, Amazon, Google, Amazon. I think the number that we had, they together they had committed was $62 billion. So so now it's 250. Earlier they had done $62.5 billion. So even if part of it comes, and gross FDI has been very robust, even this year, good growth rate, last year also, this year also. So we have sufficient reserves. So external side, is very strong, and including, the domestic macro, even the external sector is very strong.
Thank you, madam. Thank you, sir. Next question from Tarun Sharma from Z Business.
Thank you, ma'am. My question on the budget announcement on high-level committee. So, sir, what should be the terms of references? Will it be included the restructuring of banks, FDI limit, and corporate governance? And was it discussed in today's board meeting also? And what was the discussion in the board meeting which I went today?
You asking me or Governor?
It's
both. It wasn't discussed in the board meeting, but I mentioned it. Governor mentioned it from his side. The mention also did not have anything to do with the terms of reference that will have to be framed. It was a mention that it's a good step, we need to do it, and only to that extent the mentions happened. There were no discussion, and particularly not on the terms of reference.
I don't have anything to add, but we welcome it, we support it, from the RBI, and we'll work with the government in whatever ways the government would like us to work, so that the banking system is strong, but continues to be strong and becomes even stronger, so as to be able to meet the needs of the Indian economy.
Thank you, madam. Thank you, sir. Next question from
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. on NDTV Profit for your profit.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, we started off on a pretty strong footing in today's session. IT was the only one that was under pressure, and there is that momentum where somewhere it has been maintained. Where are you seeing the headwinds?
Well, thanks for that, Hiral. Largely, we had mentioned in IMO also that this up move might not sustain. A little bit of correction coming in, but still, nevertheless, Nifty holding up. But remember, it might be looking like an options data might be there on an, you could say, on a range-bound basis. Nifty Bank, the technical setup is a bit weaker, especially because what we have seen in the IDFC First Bank impact, which is there. So it's largely flattish here. Larger banks also not participating very comfortably also. But the key triggers in the market to look at is, of course, going to be on the positive developments which are coming on the US tariff front. And if we get more incremental information on that, it might benefit the Indian markets as well. FI short covering is also definitely at play. A very strong opening by rupee. That's a very positive factor for us to track in the Indian markets. But apart from that, coming back, the Nifty technicals remain better versus Nifty Bank. And right now also for both these indices, the buy the dip strategy, it still remains. So you can definitely do for a medium term setup, but of course Nifty's setup is way better than Nifty Bank. The accident of the day, there are three names coming in: IDFC First Bank, AU Small Finance Bank and UPL, where we'll give you more details on that. And if you look at it, apart from the stock specific news flows, the options data is suggesting a very range bound move. So do not expect a good up move coming in from the current levels. It can be a subdued range which could be there. Oil drops is something which is auguring well for the nation.
the Brent crude price is on the lower side. And if you talk about the other important trigger globally is that risk on sentiment has still not come yet. So these are the important market triggers, Hiral, but it's a largely stock specific approach, but a slate of negative news flows are coming in. What's there in your watch list?
Yeah, I mean, it's interesting. A lot of individual counters, BLS International, Aegis, Wopac, and both of these counters buzzing on volumes. Trident and Keytex are up in trade on the back of the tariff change. SKF again, strong moves in today's session along with good volumes building up on a PCBL. Murpin Labs is buzzing on the back of an order win. CI India gains have already hit a one-year high. Adani Ports has signed an MOU with NMDC and Vale, Brazil, and that really makes life easy. Axis Bank also buzzing in trade along with the DRL, where US FDA has accepted the BLA for Abatacept. IT stocks on the back of the Jefferies downgrade are slightly under pressure. And you have IDFC First and AU Small Finance Bank on the back of the fraudulent activities that have been identified. In fact, they've been debarred with regards to Haryana government. UPL also is another one. In spite of the restructuring, that stock is under pressure. And Guthrie Phillip, after that spectacular week, is seeing pressure in today's session. But as we talk about UPL, they are undertaking a major restructuring, and this is to reshape its entire business. The company will carve out its global crop protection units and merge them into a newly listed entity. And UPL Global, with regards to UPL Global, I did have a chance to speak to Jay Shroff, Chairman and Group CEO of UPL, and Toshan Tamhane, Group CEO of UPL, to discuss what this restructuring will look like and the strategic rationale behind it. Let's listen into what the management has to say, because the street is not really happy. Let's get in Jay Shroff, Chairman and Group CEO of UPL, and Toshan Tamhane, Group Chief Operating Officer. Let me begin with you, Jay. What will this actually restructuring look like, and what is that strategic rationale behind getting this kind of a restructuring done?
So basically, UPL over the last 50 years has built very strong platforms. So we have a very strong manufacturing platform, which is called Superform. We have Advanta, the seed business, which is one of the most valuable seed companies in the world. And we have the crop protection business, as you rightly said, is the second largest pure play crop protection business in the world. So we feel that it's the right time to unlock shareholder value in each of these platforms. And this is part of that reorganizing. As you know, we have already filed the DHRP for Advanta with SEBI and waiting for approval. This will be the second part of unlocking value, where the UPL shareholders, UPL Limited shareholders, will get mirror image shareholding partially in the crop protection business. And it will be automatically listed. And then we have Superform, where we could also raise capital and list it. And that is under discussions.
Okay. So, Jay, tell me one thing. You're talking about a pure play positioning over here. If being a pure play positioning, entity will improve UPL Global's valuation, if so, how will that be as compared to the previous integrated structure?
So when you have a pure play structure, the decision making for the management team becomes a lot more, and we can be a lot more agile. As you know, the global markets, and we operate in 140 countries. Agility is key to continue to be able to be a leader and gain market share. And we believe that each of these platforms, when they are independently listed, while they are part of the group, will have the ability to make quicker decisions, and therefore continue to grow faster than the rest of the industry.
How we have looked at it is, you have operating performance leading to financial performance, leading to valuation. And we believe that each of these pure plays, the kind of focus that one can have, the kind of capital allocation, unlocks lots of avenues for growth on the operating side and the synergies, which leads to superior financial performance, which hopefully will reflect in the valuations from an investor and board's standpoint.
Well, that's the management of UPL, but the street is clearly not liking that. Stock is down almost 14 to 15%. But off to our rapid fire segment. Joining us is Raja Venkataraman. Good afternoon, Raja. Always pleasure to have you. First stock is BLS International. Buy, sell or hold?
Yeah, BLS International is a buy.
All right.
Overall, the momentum is quite good. So I feel that the recent declines can be used to buy into.
The next stock is Aegis Vopak. Your view on that?
Aegis Vopak, I would say that it's an avoid from my side. The stocks have not been performing well. So I would say that though the volumes are increasing, I still feel that it's not going to have enough momentum. So it's only a day's play.
Okay, a day's play. Trident, Kitex Garments, any views on that? A lot of textile stocks are buzzing in trade.
Yeah, textile stocks are definitely buzzing in trade, largely due to the trade deals. I would say that amongst the textile stocks, I would place my bet on VTL rather than Trident.
All right, your views on SKF?
SKF, the benefit of the trade deal, the auto and the auto components are going to work well. So I feel that SKF has got more potential. It's a buy at current level.
And Raja, your views on PCBL?
PCBL is in a range bound condition. So I would say that it's best to wait for some action to emerge.
And Godfrey Phillips, a very positive momentum is coming in as the street is digesting the price hikes.
Right. So the price hikes have been digested, the results have been digested. So overall, it's a good positive trend in this stock. And you would see over the last few years, the stock has digested all the negative news and it has only gone up. So any reaction in the stock has to be bought into.
Right. And CI Automotive, after the management con call, there was a broking upgrade also.
Right. So the broking upgrade definitely will favor well for the stock. So it's a buy at current level.
And for a large cap, Axis Bank, what are the key levels to watch out for?
Yeah, Axis Bank is hoping to benefit from the recent news flow. And I would say that if you're going to trade into Axis Bank, one should look to buy on declines, because considering the way the markets have been playing out, I would say that a dip towards 1300 would be a good area to buy into.
All right. Thank you very much for joining in and giving your views in the rapid fire. Over to you, Hiral.
Thank you, Sharad, for that. So these are stocks which NDTV Profit has identified, but let's see what Google Trends are indicating, and those are stocks that we will be discussing with Raja as well. In terms of Google Trends on the screens, if you see the stocks which we should be watching out for: BSE, Infosys, IDFC First, Suzlon and HDFC Bank. Raja, let me come to you first with regards to IDFC First. The pressure has continued in today's session. HDFC Bank is another one where the volumes are pretty strong as well. And we know the right reasons why IDFC First is being one of the trending stocks. BSE also is catching up in today's session along with the Infosys and a Suzlon, where stocks are moving with good volumes in today's session. So that's what the Google trend is indicating so far. But Sharad, IDFC First Bank is a stock which has been trending on Google Trends as well right now. Lots brewing there. What is the latest that you're picking up with everything that has been said and done, from brokerages to the management, and now you have the finance minister also who has come out and given some comment along with the RBI?
Well, that's true. It has become a very big national issue when you talk about IDFC First Bank. First and foremost, just to give a perspective, almost 590 crore of fraud was identified. The management actually acknowledged that, and they are undergoing. There was a con call at 8 a.m. where they stated that they have started the recovery process, they have started the investigation, and also they have appointed KPMG as well as for forensic unit. Now, brokerages, they have given a mixed kind of a reaction. They have stated that this is an operational risk. This is nothing which is related to the systematic risk. And also, importantly, if you look at it, this is a big amount. This is almost like 2 quarters of, you could say, the profits. But to give in more perspective, let's give you some views from the con call which was there today earlier in the morning. Listen in.
In terms of financial impact, the discrepancy currently found is about 490 crores. We have additionally, where we have received, I would say, certain reconciliation requirements. So then through the reconciliation, we observed that there is a discrepancy of 490 crores. We have additionally estimated rupees 100 crores. That's how it comes to a 590 crores of impact, which we have put out in the press release. We have put out this number as we could best assess at this point of time, but we feel that the number is broadly appropriate to the situation, current situation. We don't anticipate this to broadly move from here on to a great extent. It could be a small, as we sort of go through So the process, maybe these numbers could slightly change.
All right, so we spoke about brokerages, we spoke about management commentary, but there is some important commentary coming in from Kunal Shah of Citi. Do listen in.
Interestingly, when you look at it, it was not a digital thing, but it was more of a traditional
Good old fraud.
Yeah,
Forge,
so maybe it was
check.
like the check issuances and not really the digital one which happened. And there was a connivance of external parties along with the employees of the banks also involved into it. But yeah, so this had the impact. We are already seeing that in the stock price of both the banks which are involved. And the directive which has been issued by Haryana government, that's very clear in terms of preferring PSU banks with respect to opening up with of all the new accounts. And if you are not opening an account with PSU banks, there has to be a specific reason as to why you are not doing that. Okay, so for all the new accounts, Haryana government has directed that it has to be with the nationalized banks going forward. Even though Haryana government as such, as a proportion of overall government deposits, that's closer to 2.7%, and as a proportion of overall banking deposits, that's hardly 0.2%.
That's Citi's Kunal's view on IDFC First Bank, but we are out of time for trending stocks. That's all, folks. Stay tuned to NDTV Profit, and thank you for the entire team which has put up this show, and Hiral as well.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets.
The last trade starts the week on decent footing but gives up some gains from this morning. Nifty hovers above 25,600. Sensex jumps more than 250 points as well. PSU banks lead gains and autos were in top gear. IT on the flip side still continues to drag. And IDFC First Bank and AU Small Finance Bank tank in trade this after the Haryana state government de-impanels all bank accounts held in both banks across the state. The move comes after IDFC First Bank disclosed a 590 crore rupee fraud by its employees and others in accounts held by the Haryana government. And UPL also tanks after it announces plans for restructuring, will carve out its global crop protection units and merge them into a listed entity. Concerns of debt burden in the stock. And it's the tariff tangle that continues to baffle global community, with US President Donald Trump now slapping 15% tariffs after the US Supreme Court struck down his earlier policies. Global economists and legal community, however, argue over the legitimacy of these new levies. Meanwhile, two main board IPOs open for subscription. Renewable energy provider CleanMax to raise over 3,000 crore rupees. Cotton yarn manufacturer Shriram Twistex also is going to be raising little over 100 crore. Good afternoon, you're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a heads up in terms of the top buzzers at this hour and even what is happening in the world of commodities, all while you grab lunch. But first things first, let's take a very quick look at what the markets are up to right now. And when you look at the Nifty, it's not much to complain about, not much to write home about as far as the Nifty is concerned. Just a 70-point uptick coming in there, hovering close to that 25,600 level thereabout. When you talk about the Sensex as well, about a 200-point uptick coming in for the Sensex. Let's quickly take a look at the sectoral picture and what that also has right now, because you do have PSU banks that are leading gains, followed by auto that is also in top gear. What's also doing well is something like FMCG. On the flip side, there's IT that is ailing in trade still. 1.5% downtick coming in for that particular index. Metals also losing some sheen, realty as well. You're seeing a little bit of a decline coming in there as well. When you talk about some of your gainers, when you talk about stocks, something like a Blue Jet stands out, Trident, CCL products. Those are some of the stocks that are gaining anywhere between 3.5% to about 10%. But when you also shift that horizon onto Nifty, you do have some of your Nifty companies, the likes of Kotak Bank, that are doing quite well, 2.5% uptick coming in there. Axis Bank, something like an HUL, Nestle, Grasim, Dr. Reddy's as well, in good shape right now. What's not doing so well from within the Nifty 50 pack is something like a Hindalco, Wipro, and some of your IT counters, be it Wipro, Infosys, or even Tech Mahindra, are under pressure as well. And that's the kind of picture that you have as far as the stock-specific action is also concerned. But keeping that in mind, let's also turn the spotlight onto the world of commodities, because you do have a bunch of updates coming in. As far as gold and silver are concerned, it's actually gold and silver that are sparkling quite bright right now. So when you talk about silver, it's actually three triggers that you're looking at. Let's quickly address those and also move on to our guest, try and get you some more insights. But before we do that, three triggers that you're looking at, it's safe haven demand that makes it to that radar on the back of rising geopolitical tensions. Other than that, trade policy uncertainty also something that you're looking at. And on adding on to this list, you do have rate cut hopes. In terms of the latest FOMC minutes, also adding a little bit of sort of pressure coming in on that front as well, and also supply concerns. But tell you what, like I said, let's also connect with our guest. Anuj Gupta, commodity expert, joins us on the show. Mr. Gupta, thank you so much for taking time out and joining us this afternoon. One thing that we're looking at right now, of course, we're looking at gold and oil as well, but silver really stands out on the back of that stellar comeback that it has managed to script, at least as of today. You're seeing quite some good momentum coming in to kickstart the week. How are you looking at it? Do you think that the dust is going to settle yet again when it comes to silver?
Yes, as expected, we saw that silver price is now trading around $86, $87 per ounce, and on silver increase and
absolutely, and Mr. Gupta, that's something that we're looking at. We seem to have you on a patchy line. Like I was saying, for silver, it's actually supply concerns that you're also looking at. And while we reconnect, Mr. Gupta, let's also take a closer look at that supply concern picture that I'm talking about, because you do have silver inventories on Shanghai futures dropping to their lowest level since 2015 as well. So what that really does is it highlights your growing strain in exchange held stocks, and that's something that you're looking at. On the supply front, other than that, in terms of other things that you're looking at, when it comes to the supply front, it's actually the 6th year of supply deficits that you're looking at for this particular metal. But like I was saying, let's go back to Mr. Gupta, trying to get his word in as well. Mr. Gupta, what were you saying about silver prices then?
The safe haven demand basically supporting the silver prices. Last week we saw three important instances. One is the Supreme Court saying that all tariff put by the tariff illegal. Creates uncertainty between U.S. administration and Supreme Court. So that will impact the safe haven demand. And also we have seen that US and Iran issue is not clear. So that is also creating uncertainty in the global market. That's why we saw again a positive gold and silver
And
prices.
Mr. Gupta, I think we still have you on a little bit of a patchy line, but while we reconnect that, let's quickly take a look at what Goldman then had to say about oil, because that's also something that we'll be addressing throughout the course of this conversation. When you talk about Goldman, they've in fact raised their forecast when it comes to Brent in the last quarter of 2026. So that's something that you're looking at. They've in fact hiked the estimate for Brent to about $60 for the last quarter of 2026. So that's something that you're looking at. Now, of course, you do have the geopolitical risk premium that is going to be at play when you talk about oil prices, and that's also something that we'll be exploring in greater detail in just a bit when we manage to get our guest back, because you do have a decline that Goldman is expecting from the current levels despite that geopolitical risk premium when you talk about oil prices. But what they also do is that they expect oil to recover in 2027. But before we come to oil, Mr. Gupta, let's try and get that answer going in terms of silver. You were talking about supply concerns. In terms of it being the 6th year of supply deficits, there's quite a lot that you're looking at when it comes to supply for silver.
Definitely, supplies are very, not as per the demand, and we saw again a supply deficit in the market. So that is also providing the support. Even the safe haven demand is also providing support. The industrial metal demand is also providing support. But yes, the higher crude oil prices are also increasing the fear of inflation. So that's why we have seen again hedge against inflation, or demand against inflation is also providing support to the silver and gold prices.
No, absolutely. So when do you see this support sort of waning a little bit, or are you expecting upward momentum to continue from here on? What is your outlook, at least in the near term?
See, we are a little optimistic for gold and silver prices because the uncertainty between U.S. administration and Supreme Court is there, and U.S. and Iran is there. So definitely, the uncertainty will be there. So we are expecting in a shorter term also gold and silver may rise from here. And for the silver, we are expecting silver may test $95 to $100 in the very coming time, and also we are expecting gold may test $50 to $100 per ounce in a very short term.
Got it. When you talk about gold and silver, if somebody's already invested, be it through the physical metal itself or through ETFs, what is the outlook that you'd be suggesting to them? Because there's actually quite a lot of volatility that they're looking at right now. Do you think that they should sort of sit by on the sidelines, wait for the dust to settle a little bit?
We are advising always that one should use the process to start investing in gold and silver ETF. So if somebody had a position on a higher level, so that's a time to average out the position from here. And we are expecting if they hold the position for the longer term perspective, we are again very optimistic for the gold and silver for the longer term. And we are expecting if somebody start investing from that level, they can get a good ROI.
Absolutely. It's ROI that is quite the word in this particular market, because that's something that is a little bit missing in terms of that volatility that we've seen of late. Last year you did have investors really making it big when it comes to their returns, but this year the momentum is a little bit of hitting a roadblock, at least when you talk about silver as well. Manages to recover, but then sort of gives up some of those gains. But when you talk about oil, Mr. Gupta, I was talking about Goldman Sachs talking about how there's a geopolitical risk premium. They're talking about how the prices, despite that, are also going to be pulling back from here on, and by the end of 2026 or even perhaps 2027, they'll actually script a comeback. Is that the sense that you have as far as oil is concerned?
See, currently oil is trading around $65 per barrel, and latestly we saw a sharp correction in the US inventory. So that will provide support to the crude prices, and definitely the geopolitical concerns between US and Iran, that will also, putting pressure on the supply side. So we are expecting crude may also rise from here, and expecting $70 to $75 per barrel in a very short term.
No, absolutely. And when you talk about gold and silver, which is the bet that you're more bullish on right now at this point in time, given that there's a lot more volatility on the silver side, but on the flip side, if you are the devil's advocate, there is also a little bit of scope for the devil's metal to also be giving you a lot more returns if the last year is to be trusted. So gold and silver, which is the bet that you're more bullish on at this point?
See, I am a little bit more optimistic on gold this time, because the geopolitical concerns are there, and definitely this will provide support to the gold as a safe haven demand. So I'm a little bit more optimistic for the gold prices, and expecting gold may test till the Diwali, I think $5,500 to $5,600 per ounce.
No, absolutely. And before we let you go, quickly wanted to get a word in as far as copper then is concerned. And which investment method do you suggest people should be looking at, investors should be looking at right now? Should it be through some of the listed players right now, or should they be looking at futures, given all of the volatility that we have? And given the fact that copper is a little bit of a complex market?